All right, good evening, everyone. I'm so excited to be back on here another Friday night Forex and Chill. We took last weekend off in observance of the holidays to give everyone a break. We do like to do that periodically. So thankful to have all of you on here tonight. It's Friday, April the 26th. I am in Kodiak, Alaska. Travel, trade, repeat. You guys know I love to travel and I love to trade. So what we cover here on Friday night is market structure. It is the most accurate form of trading. With market structure, you always know where you are in the market. So regardless of any indicators or strategies you use, if you base it off of market structure, you will be a more accurate, more profitable trader. The purpose of market structure is, again, to allow you to know what the market is doing. We follow the market makes the rules, and we just oblige. So thank you all for being here. I'm going to mark up one or two charts. We're going to go back to our roots from where we first started back maybe September or October of last year, and allow people in the audience who want to mark up and get honest to goodness positive critiques from people who are trading in this style to help you out. You know, some people are at different levels in their trading career, and we want everyone to be able to get a part of that $5.3 trillion a day market. All right, what you're looking at right now are the Heiken Ashi candles. I'm going to show you these versus the regular candlesticks. Let me zoom in on this. Okay, these are the regular candlesticks. And you see you have a lot of red and green mixed in there. If you switch it over to Heiken Ashi, you see it's either solid red going down.
I can't see your screen. Can anybody else see it?
Oh my goodness.
No, I can't.
You know, because I paused it. I really did.
I can see the screen.
I
But
can't.
not Gigi's.
Now now you can see my screen.
Now I can see it.
Okay.
All right. Thank you. I had paused it because I was dropping the link a few places and didn't want to bog you guys down with my screen. All right, what we're looking at are the Heiken Ashis. I'm going to switch this back to the regular candles. As you see, as GBP USD made its climb up, you have red and green mixed together. And on the way down, you have red and green mixed together. But if you switch over to the Heiken Ashis, you have a consistent red for your downtrend. You had green for your pullback, red for your downtrend, green for your pullback. So you don't have to guess as much where the market is going. Heiken Ashi is just a little bit cleaner. Of course, we all know Rinkos are the cleanest because it's pure price action, but not everybody is accustomed to Rinkos, and Rinkos you have to have an upgraded subscription to Tradingview. So I'm going to use the Heiken Ashis tonight. Some of you might be new to them. They might look a little weird, but again, if you look at the difference, you can see we are on a true downtrend here. And if you switch to the regular candles, you can see the red and green mixed as it's going up and down. All right, so the market, as we know, only moves three ways. We have the impulse, we have a correction, and we have a continuation. And that's in a seller's market. You would have an impulse, a correction, and a continuation. In a buyer's market, impulse to the upside, correction, and a continuation. Our job as investors in the Forex market is to find the current trend and trade along with the trend. So here we have a definite downtrend, our pullback. Some people call it pullback, a flag, or a correction. And then we have the continuation, or as the old school traders called it, the extension. So I used to tell people, remember ICE, I-C-E, impulse, correction, extension. For those who don't remember, impulse, correction, continuation is the same thing. And we have the same thing in a buyer's market, impulse, correction, continuation. Now, some of the more advanced traders, they will get in this market and they're able to get in a little early. Let's just say a more advanced trader, they can get here at the top of the breakout, okay? The safest thing for a new trader is to get in here at your continuation. Now, if you don't know where you are in the market and you see this impulse, you might jump in a little late. You're going to get caught up in the pullback. And so you're going to think you're in the negative or you got in the wrong direction. You're going to close this trade and lose money. Then you're going to go open up a buy. Then the market is going to continue to the downside and you will be in a trapped market. So what we're teaching you to do with market structure is to know where you are. So on this impulse, you will know not to jump in until after the correction and then you catch the continuation. So for example, if we had an impulse and the market flagged back to the upside, you would want to catch the breakout or the continuation. Same with the upside, you had an impulse. Just say you had a flat flag correction, then you would get in at the continuation. And see, that's the beauty of market structure. You're always going to know where you are and you're not going to get caught up in a vicious cycle of back and forth, or your stop loss is getting hit. All right, so I'm going to mark up this chart from the monthly
Robert
down.
had a question.
Oh,
he wants to know. He wants to know: would you recommend the Heiken Ashi candles over the regular candles?
Yes. Let me go through this presentation and mark up this one chart, and then we will open up to questions, so I can get a good flow here. Because I kind of just sort of forgot where I was at. Okay, so we got our impulse correction continuation, and we're going to do what's called top-down analysis. We start at the top, which is the monthly, and work our way all the way down to the 1 minute. If you hold your mouse right here, you will see all the timelines come up. Our monthly, weekly, and daily are our higher time frames, which are our most important time frames because they let us know the true direction or trend of the market. We get down to our 4 hour to 1 hour. It lets us know when we're going to enter the market or what the market is getting ready, when the market is getting ready to make its move. So our monthly, weekly, and daily tells us what the market is doing. Our 4 hour and our 1 hour lets us know when it's doing it. And our 1 minute to 15 minute tells us when to get in. A newer trader, you want to wait to that 15-minute confirmation. You might have a little bit higher stop loss, but you'll have a more secure entry. You'll be more sure of your entry. Some of the older traders on here, I know that they jump in on the 1, 3, and 5 minutes. And as you begin to learn market structure and mark up these charts, you will get to the point where you can enter off of a 5 minute or a 1 minute with anywhere from a 5 to 15 pip stop loss. You can get in on the 15 minute with maybe a 15 to 30 pip stop loss, depending on which pair. Of course, some pairs are more volatile. So we're going to trap this market. We're going to find the impulse. We're going to find the correction. And we're going to find the continuation. All right? Just like we have here, impulse, correction, and sell at the continuation. All right? So the first thing we're going to do is find our highs and our lows of each time frame. Now, if you look at the high, if you look across here at the high, look across right here. And every time it pulled up to this, we got a sell off. Okay, so the high of any time frame is the supply zone. When you are supplying something to someone, you are selling it. So this is our seller's market, our sell zone, or our supply zone. Likewise, if we came down to the bottom and we focused on this area right here, we have a demand zone. When you go shopping for something, you're looking for demand, you're buying, buying, buying. Bought here and finally broke through. So now this has become a sell zone because it sold here. It pulled up, didn't make it all the way up, and sold off again. So let's go through from the monthly down to the daily and identify our supply and demand. Now, what we want to do is focus on the most recent move in the market, especially on our higher time frames. Okay. And yes, I'm working without my mouse tonight. So if we look right here, this takes us all the way back to September 2016. So we can focus on our most recent low and our most recent high. And this is on the monthly. Now, I don't drag this all the way back, but if I did, you would see even way back here in 2008, this was a critical zone for this pair. It was acting as demand, and it finally broke through, and now it's supply, and it's rejecting off that area. So once your eyes get trained, you'll be able to look left without pulling this all the way back. But I just wanted to do that as a visual so you could see why this zone is a critical zone for this pair. All right, so we got our high and our low on our monthly. And I could bring this down to here, but if I did, you would see on the weekly that those wicks turn into candles that are protruding out. So I'm going to go back to my monthly and make my adjustment. All right, so we got our monthly low, our monthly high. Let's go down to our weekly. And your little refresh button at the bottom, reset, brings it back into view. And again, we can look for our weekly high. And since the week just ended here, we can use that as our weekly low. Now, once I get to my daily, this is when I focus on my trend lines. Now, had this been about a week or 2 weeks ago, we could have come in here and we could have showcased this uptrend. When it comes to trend lines, 2 touches give you a valid trend line. 3 touches give you a valid trend. So we have a valid trend line and we have a valid trend to the upside. Since this trend has been broken, anytime it stays above the trend line, you're in a buyer's market. But since this has been violated, I'm going to bring this around and I'm going to showcase my current downtrend, because now we are definitely in a seller's market. And this is on the daily, and it started falling March 13th, 2019, and it has fallen 498 pips. All right, once we get below our daily, so we got our high and low on our monthly and weekly, we've got our trend on our daily, we can go down to our 4-hour to get even closer to this market. So we now know we are in a seller's market. Okay, if you look left, you see we have a lot of movement around this zone here. If you want to mark off this zone with a rectangle, you can do so. So now that we've trapped the market, we can expect one of 2 things. It's either going to come back to our trend line, reject and continue down, or we could get a break to the upside where it came up, got an impulse, a correction, and a break back to the upside. All right, so this market is completely trapped. It is our job now to follow the market in the direction it goes. Just because I got a trend line doesn't mean it's going to keep going down. Just because I have support here doesn't mean it's going to shoot up. If you look left, it shot up here. It didn't make it all the way down here and shot up again. When it got here, it shot up to the upside. Prior to that, it had been below. All right. So how would we have gotten in and sold this from the top? I am going to go mark this area so we can focus in on a lower time frame. All right, before we start looking at entries, does anyone have any questions about how we got to this point so far? And you can unmute yourself to talk. Kumar, the only time I cut through a wick is when I'm doing my supply and demand zones with my horizontal rays. With my trend lines, I usually don't cut through a wick unless it was a big fake out. Sometimes I've cut through this wick in the past, but usually I just use, I don't use Elliott waves, no, but I do use patterns, which are considered a part of the Elliott wave theory. All right, anybody got any questions on any of this so far before we zoom in on a 15-minute and look at why we would have entered the market?
Would you recommend the Heiken Ashi better than the regular candle?
I do, especially if you're newer and you can get used to using it, because as you see, it shows us a clear uptrend. Let's see how it looks on candles. You see a lot more red and green mixed together on this. Regular Japanese candlesticks versus the Heiken Ashi. All right. So one of the first indications that we could have been looking for a sell zone is that we were at a supply zone on a higher time frame. When we looked on our daily, this was the supply zone that we had reached. So that's confirmation number one. When we go down to the 4 hour, we got a double top, and it's also wicking. So we can go down to the 15-minute. Let's see, that is March 13th. Let's go down to 15-minute, and we can pull up March 13th. There's 0413. Let's see how we would have found out that we were in a seller's market and to sell GBP USD for those couple hundred pips. Okay, like I said, we had our first two confirmations. We were at a supply zone, and on the higher time frame, we also had a double top. Now, if we look, we had a wick, we had an impulse to the downside. It came back up. Even on the lower time frame, you basically had a double top here. Now, the most important candle when you're trading market structure is an engulfing candle or an impulsive breakout. So we had an impulsive break flag.
You're going in and
This
out.
pair was very, very choppy.
Gwen. So I think that her internet just paused.
Yeah, yeah, my internet paused. So after we had the double top, we could have entered here because it had already double topped on a higher time frame, and now it double topped on a lower time frame. Right. But once we know what we are looking for in the market, we can start using our indicators just as confirmation. The two indicators that we use are the 9 and 50 EMAs. My blue is my 9 and my red is my 50. And I also use a MACD. And the MACD is at default settings. Can you guys still see my screen and hear me?
Yes, we can.
All right. So we had a double top and a breakout to the downside. And you see right here, our 9 and 50 crossed. At the same time, our MACD crossed. And we could have taken that break for 180 pips. Now we did have some premature breakouts here, and you could have gotten in and caught about 93 pips before it pulled back. Had another one here, had 116 pips, and then it pulled back. But the cleanest break would have been here when it broke our trend line and it crossed the EMAs and down here. So you could have caught 80 pips here. You could have gotten caught 90 pips here, but then our final breakout, we got 180 pips. All right, then it pulled back again. You had a deeper correction and draw a trend line there. You see it pulled back to our 4-hour trend line to the downside. If we go here, this was our first breakout. It broke all the way down here, and we had a correction to the trend line. That brought us right here to March 28th. So let's go back to the 15-minute.
It hasn't been the 28th yet, so I think
I know, girl. I just noticed that. I'm like, I'm not trying to put April 28th.
my mom's birthday.
Yeah, that's what flying across all these time zones is doing to my brain. Okay, once again, we had another breakout. The EMAs crossed. I'll clean my trend line up here. Trend line break, EMAs crossed, MACD crossed. So on this one, the riskier traders, when it rejects the trend line, would have probably gotten in for 200 pips. The safe traders who wait for all of their conditions to be met would have caught 157 pips right here. So for each flag, you can draw your trend line and wait for your trend line break. Actually, you could have pulled this up here and caught it a little bit higher now that I'm zoomed out. So remember, on your flags, you can draw a trend line on your 15-minute flags, and you look for the same confirmations. You got your EMAs crossed, your MACD crossed, and your trend line broke. So if you had caught that pullback and got in for the continuation, that's 242 pips in 1 day and 17 hours. When you see it coming back across the MACD, you can either get out or hold. I can tell you most of us on here from our team, we hold these from the top to the bottom and stack positions. Each time you're seeing me do this and catch that trend line break is an opportunity. You could have stacked an additional position and turned this 300 or 400 pips into a 1,200 pip move. So again, it broke our flag right here at the same trend line. So we got a break of the trend line here, a rejection off the 4-hour trend line. The EMAs crossed, your MACD crossed. You got multiple confirmations to get in. Stevenson Lindor did a special webinar with our team the other night about having confidence in your trade. First, we know that we are in a downtrending market, okay? So sometimes the trades are right there in our face, and we as traders are afraid to take the trade. So on this third pullback, we hit our trend line to the downside. We broke out of our trend line that was covering our flag, our EMAs crossed, and our MACD crossed. Okay, so that's April 4th. So whenever you have multiple confirmations, that's called confluence. And start back testing this, start marking this up, start trading in a demo. You need to work on your confidence as a trader so you don't miss these trades. All right, you could have gotten in again here, and this led to 184 pips. And finally, we are at the end of the downtrend right here. But you could just go through this whole thing on the, when you're on a higher time frame, you draw your trend line to showcase that downtrend. And you see we had multiple times where it pulled back into the trend line. And we could have looked on our 15-minute. And my confirmation when I take trades, everybody needs to have a set of rules that you ask yourself before you take this trade. Where am I in the market? Sell zone or buy zone? What are my confirmations? Okay, I was in a sell zone. I had a double top. Higher and lower time frame. I had an impulse or breakout to the downside. I had a correction. And then I would have sold continuation. I had my 9 and 50 EMA cross. And I have my MACD cross. And if you have all that and you don't take the trade, you just walked away from, let's see, how many pips was that? That's a lot of confirmations that could have gotten us at the top of this. And you don't even need that many. Some people have about 4 or 5. But if you had gotten in at that breakout up there and got it down here to the zone, you'd have gotten over 400 pips. You could have gotten in 1, 2, 3, 4, 5 times on this trade. So you could have gotten 400 plus another 3, another 2. So you could have gotten way over 1,200 pips on this one pair. So that's why we like to focus on market structure, find one high probability trade and milk it. You're better off focusing on one pair and getting the entire move than you are trying to manage 4, 5, or 6 different trades. If I trade on GBP USD and get 1,200 pips out of one move, that's better than trying to babysit a bunch of different trades. Does that make sense to everybody? So you can get 1,200 pips on one pair. And if you want to know why we knew it was coming down to here, because this was the last area where we had any type of resistance. And if it breaks through here, we still have, let's see, how many more pips? If it rejects and comes down to here, that's another 500 pips we could get. So if it pulls up to here and rejects, get in on the 15 minutes. You can get those same confirmations. You can put a trend line under your flag. So let's do that now. Let's clean this up a little bit. I'm going to do a real fast markup on one more chart, just any random chart, and let one of you guys mark up. So right here is you're going to trace your flag by putting a trend line. If I can get the trend line on there. If it rejects here, breaks your trend line, and gives you that EMA cross just like we have previously. If it rides back up here and breaks and the MACD breaks to the downside, you want to make sure that if you look at the past moves, you'll notice when you're in consolidation or a flag is creating, your EMAs twist together like a braid. Whenever there's a breakout, you'll see them breaking apart up here, and you'll see the MACD come through strong, and you'll also see separation of your two EMAs. When they pull together, you're getting correction. When they separate, you're getting continuation. Pull together, correction, separate, continuation. So you see here when they separated, it had pushed to the upside. It's pulling in, so it's probably just going to make its way back up this trend line. And then once it gets there, we will know whether it's going to break through and pull back up or it's going to continue to the downside. So does anybody have any questions on that so far?
I'm going to ask you some questions that are going on in the chat room. So one person asked, when it's breaking the trend line, would you wait for a retrace after the trend line was broken, or would you play the breakout?
I always play the breakout because you're not always going to get a retest on breakouts. You've already had your breakout and retest from the top of this move. You see this breakout, there's no retest. This breakout, there's no retest. This breakout, there's no retest. The only time we look for retest is when it's getting to a zone that's hard to break. The higher the time frame, the harder the zone is to break. So if you look at this one, there was no retest. This one, you had a small retest, but it's up here near the top. But most of these, you're definitely not going to get any kind of retest. When you see it break and separate, you miss a lot of pips waiting on those retests. Like when this one broke, you would have missed 40 pips waiting on it to pull back. 40 pips can make or break your day. That's a lot of pips. Like right here, this one went down 72 pips and pulled back up to 25 and then went back down to 96. So you would have left 25 pips on the table there. This one right here never broke, never retested. It dropped 105 pips, corrected to 50, and then dropped all the way down to 182. So me, I like to catch it from the top and hold it all the way down to the next zone. Any more questions?
There was another question that asked, does price not typically break out after the fourth touch of a trend line? How would you be able to determine if it will break out or continue going down?
again, that's going to go back to where you are in the market and what time frame you're on. No, that doesn't always happen, because you could be expecting a 1 hour correction. You could be expecting a 4 hour correction, or if you're expecting like a weekly like that. If you look at that GBP USD, it consolidated for days before it ever broke out at the top. You see, this only touched twice up here, and then it broke to the downside. So no, that rule doesn't always apply. And I understand where you're getting that from, but no, that doesn't always apply. So let's look at GBP NZD. Just follow those breakout candles.
We had someone asking for EU and EJ, so take your pick. EU was asked first.
I'll do your USD, and we'll let somebody else mark up the other ones.
Nice.
Yeah, that's selling off, ain't it? Yep. All right, let's take this one. And I like to mark up on my naked chart, so I'm not, if you want to know what these are my templates I save up here. You can create a template with what you want on it and save it and name it what you want. Put a star beside it. It shows up here. This is my naked. This is one I use for Rinkos. This is one I use from one of my mentors here. And this is my 9 and 50. So you can create as many templates as you want if you want multiple confirmations. Like when they had that, the Bollinger Band, the bounce back, the original bounce back, I saved that. I like to know a little bit of everything. So when my people ask me questions, I'm familiar enough to do it. But I always mark up on the naked. And I always start at the monthly. And I always focus on my most recent low, my most recent high on each time frame. On here, like I said, you can pull it back if you want to visually see how much support and resistance you had in an area. Then when I get down to my daily, and you'll find what works for you. Now, if you get into an area like this, where you have a channel going on, channels are a good thing to identify. See, got my ruler's in the way here. Let me move this out of my way. All right. This is getting in my way. On the daily, you can see a channel going on right here, a descending channel. When you have a descending channel coming down to a buy zone, you could see a possible reversal. So you could see this now break out of here and go to the upside. But the dollar has been getting really strong. That's why the Euro USD has been going down. And see, just on the daily, because of this pattern right here, it keeps going up, 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 up in this channel. You could look for a buy. Anytime you see a channel, you do want to identify it. Going down to the 4 hour, and you see you're already starting to see signs of a buy. So zooming in on the 4 hour, you can see what this has been doing. Every time it hit the bottom here, and this is why patterns are important. First thing my eyes saw was that channel, but it's because I'm so used to marking up that I just see certain patterns in the market now. So all of these were buys. And if you took all those off, what do you see? The opposite direction, the sells. So this pair has been trying to break to the upside, but it's been in a channel, a descending channel. And this is a very long descending channel. So if the dollar finally corrects, we should get a really good buy on this pair. It's been consolidating like since last October. The market has been very, very strong. Let me go back to my daily. I'm going to bring this down a little bit right here. If you notice right here, and And right here is a very critical zone. Even looking right here, if we drag it back, it sold off here, it broke through, retested, and then pushed up. So yeah, we have this in a descending channel, and 9 out of 10, when you see a descending channel, you see a reversal to the upside. So, and again, you would start looking on your lower time frames for entry. This one's sort of kind of easy. You're going to look for the bounces off here on the lower time frame. Let's see what we got. So right now we do have an impulse and a correction. We can turn on our indicators right here. So it broke through our MACD. It's retesting it. And if it rejects, we should see it continue up to the upside. All right. So who has questions? And after questions, we'll let someone else mark up, and I'll sit back and enjoy watching you guys put into action what you've learned.
We just had a question that you basically answered, and they wanted to know what time frame do you look at for the 9 and 50. So I hope that person was looking at when go to the lower time frame to do her 9 and 50 EMAs.
Yes, I don't go any lower than the daily looking for my trend. I look at the 4 hour to see when the trend is happening. As you see here on the 4 hour, I'm seeing my bounces, and I start looking at the 15-minute or lower for my entry. I use the 9 and 50 on like the 15 and the 5. See here, this crossed to the upside and gives our first breakout. Let's see right here. That went up 27 pips. And if you look at the impulse correction, you got this. And you got what's called a flat flag. This was probably news, and then you had a breakout. And now you're getting this flag. And hopefully we'll see a continuation to the upside. Because I know some people who are in this from the bottom here.
Mm-hmm. Can you put that confirmation box that you typed out on GU? Some people are really enjoying that and they want to see that again. And then Sean Murray, please unmute yourself and ask your question. Go ahead, Sean. We see that you're unmuted. You can go ahead and talk. All right, Sean, we can't hear you, so go ahead and work on that mic issue, okay? Robert wanted to know, what is the best way to learn about the pattern?
I'm glad you asked that question, because one of my very, very good friends, he learned from Stevenson Lindor how to trade at the age of 22, and he retired as a trader at the age of 22 as a six-figure trader. He is now 23, and he has his own IML TV channel under Forex Advanced, and he is a beast. And when I say beast, I am not using the word lightly. His name is Marios Columbus. Right here. He looks like a baby. Yes, he's 23-year-old. He left college because he became a six-figure trader in under a year. Now he has his own IML education channel. He covers patterns. He learned from Wave Trader. A lot of people follow him. But you can also Google Forex continuation patterns. And if you click on images, this is one of the charts I like. These are reversal patterns, and they also have continuation patterns that you can look through and find here. Print these out, draw them out in a notebook. But once you learn to identify these patterns, like here's the reversal patterns. You see your double top or your M. This is the head and shoulders. Your ascending channels, your triple tops, and it's the same thing with the bottoms, double bottom or W. Inverted head and shoulders, descending, descending, and triple bottom. Here's the continuation patterns. A bullish flag, bullish pennant, bullish falling wedge, a bearish flag. And the only one it didn't cover on here is the flat So you usually have impulse, correction to the side, and continuation, or impulse, a descending flag, and continuation. And I'll tell you, these typically correct about to 38 on Fibonacci. These typically correct 50 to 61.8 on the Fibonacci. All right,
So
any more questions? Mm-hmm.
would you get into an entry as soon as it breaks the flag, or do you wait like a candle or two?
Me being an advanced trader, I buy from the bottom. For newer traders that don't know market structure or have their confirmations or confidence down yet, as soon as it starts breaking out and I got my 9 and 50 cross or my MACD, I will get in.
Okay.
So the safest trade is the breakout trade. The riskier trade, but like if you catch it at the bottom, you're going to have a tighter stop loss because it's going to be right below here. And if you catch it here, your stop loss is going to be right below here. So once you learn market structure and you learn these patterns, you can basically tell. But always check the news. Everybody here, make sure you check Forex Factory. This should be a daily habit. Any pair that you're looking to get into, know if you have red folder news coming up. 9 out of 10, the news only pushes it in the direction it was meant to go anyway. Kumar, there's always a chance of reverse. The market's going to do what it wants to do. You have news, you have politics, you have economy, Trump tweets. I ain't trying to be funny, or Kim Jong wants to pull a bomb. The market goes crazy. That's called sentimental moves in the market. Sentiment is created by fear or confidence in a currency. That's why you see spikes sometimes. Something might be announced on the news that will cause a crazy spike, but 90% of the time it just falls right back into market structure. Sentiment is very short-lived. Market structure outrules everything. Because
So
the
you
people
said news pushes it in the way it's supposed to go?
typically, now
Okay.
I'll show you an example. Like we had, and I think it was right here. Like right here, you can have news coming up. You could be like right here and have news coming up, and it would shoot at a real strong candle there, and then it would just turn around and pull right back after about an hour. I've seen it happen 100 times.
So it's still gonna reject off its zone or whatever.
If that's the pending order price that's set and the market structure is following, yes. I've seen a candle push all the way up here, and that's why these zones are important, because I've seen something shoot way up here, give a perfect flag, just to drop back down to market structure.
I have seen it happen often.
Yeah,
Same.
you can see a beautiful flag, but if it's got a trend line sitting up there that it's been respecting, a lot of times you'll see that little 15-minute flag, and then you'll see it throw like a little hook and then drop right back down.
We need your tips and tricks. Sean had a question, but his mic wasn't working. How do you locate the 9-5 indicator in TradingView? And then he wants to know if you can give a little explanation about how the MACD works.
Yes, any indicator, you just click on indicators. Now there are different types of moving averages. I use the exponential. So this is, I guess I'm getting a lag again. It's not popping up. The one good thing about this strategy, you can have 3 indicators on a free trading view. So you can have the 9 exponential, the 50 exponential, and the MACD. So I'm assuming I got a lag going on because it's either that or TradingView's not letting me, but when Mahogani or someone takes over, they can do it. On the MACD, I will explain that.
Yeah, I'll definitely make sure to get that out for you, Sean.
So let me show you guys one thing. Over here on this eye, you can get rid of the eye and get rid of everything. There is this little thing called pivots, and I have it hidden. For new people who have problems identifying support and resistance, you can turn on pivots. Go to settings and choose Fibonacci. This is under indicators as well. All right. If you have a problem finding support and resistance, you can draw a line over it here. Ah, man, I forgot it would do that. Let me find a chart that I can just completely erase. All right. Take everything off here. And I like to do this on my daily. I can just take this, 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 and this. All right. I put it on each one of those. I go back and hide it to turn it off because it changes with each time frame. And now if I look at my 4 hour, you see I have like perfect zones of support and resistance marked through there. All right. So those of you who have a hard time finding your zones, switch it over to candle so you can see. And if you pulled it back, you would see these are very good zones that it marked right here. You can just use it to cheat for those of you who haven't trained your eyes yet to notice these zones. So I'll do that one more time. I go on my daily. I turn on the pivot tool, reset and zoom in. If you want, you can just take your most recent high, which would be that one. Your most recent low would be there. And the one in the middle would be there. I turn it off again. Then if I go down to my 4 hour, now I've got some zones in there.
And that's in the indicators, correct? The pivot
Yes,
tool?
it's called pivots. And I turn it to Fibonacci setting. The traditional settings, I like the Fibonacci settings. But there was one here on it as well. So this is probably, if you look and you just draw your trend line now, it's coming down to here. All right. So look again at these EMAs, how when they broke and separated, you see it rejected off that trend line area. You got another entry here, a little entry here. It's pulling back to your trend line. And when it breaks, oh, I got the wrong thing. It looks like it's going to give one more push up. So we'll probably get it push up to here and then break because your MACD is already crossing. All right, let me zoom in on this MACD. All right, your MACD is made of 3 components. If you've watched Stevenson Lindor on the bounce back, he covers it a lot. The 3 components of a MACD are your histogram, which are these colors, your MACD line, and your signal line, which are these 2 right here. And you can look at the settings. Your MACD line is your blue, and your signal line is your orange. We don't change any of these settings, and I've noticed that these go hand in hand with the 9 and 50. If you notice, they move almost contiguously together. All right, you see the first sign of a pullback or a flag, these 2 cross down here. They pulled up, they crossed over slightly, came back down, and pulled up again, and now they're rejecting. These usually, when you're in a downtrend and they cross to the upside, you're getting a correction, okay? If you look at it on a higher time frame, it doesn't weave in and out as much. You see here, it broke through one time and stayed below for the whole drop, 165 pips. Let's look at it on a better pair. GBP USD. If you look on the higher time frame, when it broke through, was here. And it's also where that 9 and 50 crossed on your higher time frame. And that's 340 pips. So it broke, it started right here where we had that double top. And you see you almost had like a little double top here, just like it. These two crossed, fell to the downside, correction, downside, correction, downside, correction, and continue to the downside. Whenever it's on the upside, you had an uptrend. When it went over here, so it started crossing right here, it pushed it up 550 pips. So the higher time frames, I look at it for the overall direction of the market. And the lower time frames, I look at it for entries and to know when my pullbacks are over. All right. So if we go back, just wanted to zoom on that so you could, when I go to my template, it puts it back in perspective. All right. And if you start watching it with your flags, you'll notice how it moves together. Like right here, where your MA is crossed, it rejected. All right, you had a pullback here, and when it broke there, let's see, oh, here's the one where it broke right here. And there, they crossed this one here, sort of went with that right there. But I wait for all three to happen together. I wait for my break of my trend line, my cross of my EMAs, and my push down of my MACD. You had another one here. Can you see where it crossed here? The EMAs crossed, the line broke, the trend line broke, and your MACD went to the downside. So these are just the 9 and 50 EMA goes hand in hand with the MACD very well. All right, any more questions before I turn it over to someone else?
Becca had a question. She wants to know, do the fib levels or do the pivots relate to the fib levels like the 50, 61, etc.? Do you know?
This was just a tool I found, and for inputs, I found that the Fibonacci just lined up better with the way that the market moves with impulse and correction and support, supply and demand. So sometimes I'll find it something and I'll just play with it to see what lines up better with market structure. And that tends to work very well. And somebody was asking about selling at the breakout. For the people who are the riskier traders, like if you pull this here, if you look inside this right here, you saw a little impulse correction, then you got your continuation. You also got your cross right here. So you could have sold from here and your stop loss would have been right above here and you would have caught a lot more pips. So you're either supposed to sell at the top or the breakout. Never sell in the middle because you don't want it to reverse on you and shoot back up. So either sell at the top where you know you have a good chance to catch it to the bottom, which was like 40 pips. So you have plenty of time to move up your stop loss in case it pulled back. And same here. You could have caught it at the top and sold it down. This one right here, if you were looking to continue selling, you want to draw your trend line at the top and wait for it to pull back up to the top again. Okay. I'm drawing sloppy lines because I'm sitting at a hotel desk with no mouse, but I think y'all get the picture. Whenever I'm actually trading, I try to draw them as clean as I can. All right, any more questions? So if you hadn't caught this sell up here at the top, definitely wait to the breakout at the bottom.
I have a question, Gigi.
Mm-hmm.
Right there, if you wait after the breakout, I get confused knowing when to wait for that retracement to enter, or do you have, as soon as it breaks that trade line, it's safe, it's okay to enter?
Well, I would have entered because my 9 and 50 had crossed and my MACD had crossed.
Okay.
And it broke your trend line. So you got 3 confirmations. Well, you're in a downtrend.
Uh-huh.
So that's 4 confirmations. You had your impulse and you got your correction. So this had crossed right here. This had crossed down here. And you got your breakout. So you could have sold here You could have sold down here when it broke out.
Okay.
Yeah, learn to trust your confirmations, and the best way to do it is to go back and back test it. All right, anything else?
Ask now or forever hold your peace. You got her full attention. You guys
Yes,
can
this
unmute
is,
yourselves.
hi, this is Gloria.
Hey, Gloria.
Hi, how are you doing? So you said when the 50 and the 9 pulls together, did you say that was a pullback?
Yeah,
I
do you
know.
see right here where they're like wrapped like spaghetti noodles or something?
Yes.
Yeah, they're, and then you see here at the breakout, they separate.
Separate, so that's considered the breakout.
Yeah, when your
Okay.
EMAs separate, you got a lot of movement going on.
Okay. Okay, I just want to make sure I wrote that down
Here,
right.
especially at the top where they separated there,
Mm-hmm.
and they pull back together for your correction. They separated again, they pull back for your correction. This was a longer correction. Whenever you see a longer correction, this just means it was probably due a correction on the 4-hour. Let's see how long that took. 4-hour correction takes about 2 days to happen.
Mm-hmm.
Let's see from here. Yep, that took 10 days. That was probably a weekly correction because it took 10 days to correct.
Okay.
So you'll see the first breakout will have a smaller flag as compared to the second and third because it goes by what is due in the market. So whenever we were trading this on the daily, give you an example. I'm gonna take all this off. All right, whenever we were trading this on the daily, before all those sales happened, you see you had a big push up. This was a weekly correction. So even though we knew it was in an uptrend, because on the higher time frame, it was due a correction. We caught 350 pips, had another push up. It was due a big correction, caught about 300 pips. So anytime you have a bigger time frame, that's the only time that we go against the trend, because even though we were on an uptrend, it was an uptrend on a higher time frame. So the higher the time frame, the bigger the correction. All right. So if we take this off, let's see what that was on the Fibonacci. So from here to here, it pushed up, it dropped down to your 61.8, which is our golden ratio. Then it extended and hit our, usually on your first extension, you get it to your 272. It came up there. Then it pulled back down to the 50. Okay. So on the higher time frame, you can look and see if the people who use patterns, this would be your A, B, C, D extension. That's probably like a butterfly or Gartley or something. I don't draw the patterns, but all those patterns that people like to trade are based off Fibonacci levels. So let's see, just to, let's see if I get this right, because I hardly ever do patterns. I did it wrong. I should grab the other one. Let me try the other one. I used to do this for Jamie because Jamie likes patterns. If you use the pattern tool, it's based on moves off the Fibonacci bounces. Here we go. X, A, B, C, D. All right, so those of y'all who like those pretty little patterns, there you go. They're based off Fibonacci extensions. So if you ever want to figure out a pattern, just draw your Fibonacci on there. And that will give you your A, B, C, D. All right, anybody else who wants to mark up?
I wanted to answer Philip's question. He wanted to know, do you teach regularly? Because you're a very clear teacher. And I want Philip to get back with the person who invited him on here, because we do this every Friday night, but this is for our private group training. She's being kind enough to teach and show everybody, because this is information that we all need to know. But get back to the person who invited you so you can find out how to get into our private groups.
Another quick question. You have this on recording. I want to do a replay, like basically gonna look back on it, whatever I missed in the beginning.
Tomorrow it will be on YouTube.
On the what?
Type in ForexNChill, one
Chill?
word.
Okay. Thank you.
And this is our channel.
Hold on.
And all of these are on there. Somebody told me he had watched one of the previous ones about 6 times with one of our good friends, Clint. Somebody commented on the one Terrell did. I have a lot of guest traders come on here, but I used to do these all by myself for a long time. It gets tiring. So as our team grew, our traders grew, their knowledge grew, I started having other traders jump on and share their perspective as well, because all of us are trying to get from point A to point B, and sometimes we take different routes, and somebody might teach you something that I don't know, or that might click better with you. It's not that I don't know as much as them, it's just their teaching style might click better with you. So I love to have other traders on here.
All right.
But we like to keep it to market structure, because strategies only work for so long. If you don't know where you are in the market, I don't see how anybody trades off anything lower than the daily, because anything other than that, you don't know where you are. You don't know when to expect a reversal, because like I was showing right here, looking at the daily, we were able to catch 300-400 pip pullbacks, because we know on the daily it's due, because we got our impulse, correction, continuation, correction, continuation, correction, but it finally broke our daily uptrend. So now we are in a downtrend, and we can see this pull all the way back down to here. The only reason we are focusing on this area right here is because this is a strong area of pullback. So if this rejects, we could see it come up, create a double top from here, and back down. One pair I'll show you in particular, I like to point this out so you'll see the importance of knowing where you are in the market, is GJ. I already have it drawn up, but I'm going to get rid of all that and show you what is very important about knowing where you are on the monthly, weekly, and daily. So if we look at our daily, we had been in an obvious uptrend, okay? So everybody would agree we're in an uptrend here, right?
Yes.
Yeah.
But what if I look at my weekly? What were we in, actually? We were actually in a downtrend on a higher time frame. So any buys that we were catching were corrections from the weekly. You see that? So that's how I knew that at this point I could look for a reversal, because what's happening right here, it's at the weekly rejection point. It went a little bit above it, but now it's falling back down. So this right here is a very volatile area for GJ, because if you look on your weekly, you had a big impulse. And this was just all a big correction. And this has been a continuation to the downside. So this buy was just a correction off of this continuation. Does that make sense?
Yes.
So we had our impulse, correction, continuation. So this could just be a correction going on here, and we could get that. But we'll see. And again, on the higher time frames, you can notice these channels. You could have known a lot of times when to buy and when to sell, because this was in a beautiful channel coming down. You could have sold, bought, sold, bought, sold, bought, just like that, going down. All right. This is also a reversal channel, so I wouldn't be surprised if we saw this push up a little bit, but
Okay.
it's going to depend on Brexit with these GBP pairs. That's why you've seen a lot of consolidation with them because of Brexit talks. All right, anybody else? Or is there anybody who wants to volunteer to mark up a chart?
Before we start marking up chops, one last question. Someone asked, can you identify the golden cross on your chart and what exactly does it signify? That's going to be the last question before we start marking charts.
All right, I've read up on the golden cross. That's the 50 and the 200 EMAs. When they cross going to the upside, that's the golden cross, letting you know you're now in a buy. When they cross to the downside, that's the death cross. Death cross, letting you know you're now in a sell. The more experienced traders, they use it on the daily, and they use the 200 and the 50 to find reversals in the market. So you would go to indicators and get a 200 and a 50, just the same way I'm using 9 and 50 on the lower time frames. They use the 200 and the 50 on the higher time frames. So golden cross means buy, death cross means sell.
And that would be anyway from the daily and up time frame.
Yeah, I think they use that on the daily. I don't use it. I just use market structure, and I just use the EMAs on the lower for my entries. That's the only thing I use EMAs for, but that is a very well-known reversal pattern across stocks and Forex. Whenever I hear something that I don't know what it is, I Google it just because I like to know enough to discuss. And although I don't use it, I know that's what it is.
When you look at what you have in your chart, would you say that that was an impulse to the top? This is just a deeper correction and it's going to make its way up from the top of that trend line?
This one right here?
Yep.
See, that's what I was saying. I wouldn't be surprised if I saw this push up here. But it's all going to depend on the strength of, if you look at the GBP by itself, which you can do with each pair by putting WCU. The GBP is falling, okay? If the GBP continues to fall, we could see all GBP pairs continue to fall.
Gotcha.
JPY, guess where it is? It's on an uptrend. So if JPY is getting strong and GBP is getting weak, we'll see a sell continuation. That makes sense?
Absolutely.
All right. I hadn't marked these up lately.
Yes, and that's true. The yen is going to be closed for a long spring break, the first of its kind. So it's supposed to be pretty volatile over the next little while. Mario's actually put out a little snippet about that.
Yeah, I had put it in our Telegram a couple days ago too. I saw it floating around in a couple chats, and I put it in ours a couple days ago.
Yes.
About the 10-day break for the yen market.
Yeah.
So it's going to be completely controlled by whatever's going on with the dominant pair. So if GBP is getting weak, it could continue to sell or it could consolidate.
Mm-hmm.
Okay, so with the Olympics being in Japan this year, would that have any effect on the JPY?
It would bring more money to the economy. It might give a slight boost.
Okay.
You know, they're ruled a lot by commerce, and their currency is not that strong. But it is I heard a wave trader talking about it as a safe haven currency where people do move their money when their market is volatile. All right, anybody else?
Hey, Gwen, I just wanted to ask, just for confirmation of the EMAs, that would be when price breaks through both of them, correct? Like, for example, your 9 and 50.
When your 9 is on the upside, that's your blue. That's usually buys. And when the red, the 50 is on the upside, that's usually your sells. And like I was showing, when it's consolidating, you'll see them twist, like pretzel up a lot. And then when they get ready to continue the move, they separate. And they always go in conjunction with the MACD.
Okay, Perfect. Thank you.
So they're made to use together as like a double confirmation. You can use it alone, but it's, you know, confirmation is confirmation. The more confirmation you have, the better.
I have a quick question.
Mm-hmm.
You know how you say buy it, sell it, buy at the bottom, sell at the top, or your channels or your flags, or whatever. How
Mm-hmm.
far after the bounce do you get in?
Again, I look at my 15-minute, and I only do that on big channels. I wouldn't do it on like a 30, 40 pip channel. I try to do it on like 100, 200 pips. I think it was Euro CAD or Euro NZD had one that we kept trying to catch from the bottom a while back. Yep, right there. This one right here. A while back, we kept trying to catch it. Let's see. Right here. We were buying this from the bottom every time, because if you look at it on a higher time frame, this is a reversal pattern. But what it did is it pulled back into this daily low. It kept pulling back here, but every time it got here, you can't see it well on, let's switch it to candles, you'll see it better. You see, it kept buying up, because it's a reversal pattern. And we know this as a descending channel, reversal pattern to the upside. We were trying to catch the buys. So it shot up 316 pips. It fell down. It looks like it's coming back down to the bottom again. Euro has been losing strength. I don't know what's going on with the euro, but it's been in a slump. I know that they're getting rid of, well, they're not getting rid of, but what's his name? Draghi. He's retiring. He's been in charge of the federal bank for many, many years. And ever since he announced his retirement and GBP, Brexit stuff going on, the euro has been just declining.
This is a good example, right, of sentiment. It's just they're reacting to him not being there anymore.
Right. He announced that he's resigning. His right-hand man is resigning, and this has just been steady going down. All right, you're welcome. Anybody else?
Yes, we do. I was looking at old, some of your old YouTube videos, and you were doing the trend line on the monthly, weekly, and daily. Is the high and low better the way you're doing it now, or either way?
Yes. When I first started market structure, and I'll do an example of that. And let me do GBP since I got this on here. When we first started learning market structure, it was called boxing in the market. And you can still do it, and there's nothing wrong with it. But, you know, as you grow and evolve, you find what's easier. And you would do the same thing. You would identify the most recent trend, and you would just do one trend line per time frame. That downtrend's been broken. So let me go back to the monthly with that one. It's been so long since I did this. Goodness. So we could look at this downtrend on the monthly. We could look at this last uptrend on the weekly. And this is just called boxing in the market. And it's a good way for beginners to learn. And when I teach private students, this is what I have them to do, is to go through and identify the current trend of each zone down to the 4-hour with a trend line. And what it does, and if you don't need one, don't add one. But what it does is it corners the market. You see now the market's cornered. So the market only has two ways to go, to the upside or continue to the downside. So there's nothing wrong with that, but I just learned, you know, a different way that I like better. And it's just focusing on, and it's because I'm always continuing my education, trying to learn and see what works and make it easier. And this is a lot cleaner. I think this style is a lot cleaner.
This looks a little easier to me, so.
It is. Okay. And like I said, I saw other people, you always learn, you can learn something from everyone. And that's why I said I like to bring on other traders, because I don't want everybody just to be focused on what I do. Because like I said, something I do might work for you, but someone else could have another perspective on something else that would, you know, give you an aha moment. So, and once you get used to marking up, this just becomes like second nature.
When did you start doing the high and low? Because I have went all the way back to the beginning.
What, say that again?
When did you start doing the high and low?
Gosh, a couple months ago, but I've been letting other people teach.
Okay.
So you probably just hadn't seen me do this.
Okay.
You've been doing it for a very long time, Gwen, because now that you talk about not doing the trend lines, I was like, wow, I was doing that in October.
Yeah, we were all doing it in like October, November.
Yeah.
And I think when I went through that first boot camp, I switched to this.
Mm-hmm.
And as traders, we should always learn and grow. No matter how long you trade, someone's going to come up with something that you like. And that's why, you know, there's a lot of people out there. Oh, you're not in our group. We're not going to teach you this. We're not going to show you that. I don't like that. That's why I started doing Friday night Forex and Chill for the public, because this is so easy and it's so easy to learn. And if you know where you are in the market, any of those little strategies would just make that much more sense. So, all right. Who's marking up? Who's our guinea pig tonight?
Please don't be shy. You know I'll get up and mark it up.
And I'll tell you now, we let anybody who wants to mark up, mark up. If you want us to pause the recording, we can pause the recording for that portion. But the best way to learn to mark up is to mark up. Kumar said he's going to do it, so I'm going to stop sharing.
Kumar. Go ahead, Kumar. Thank you for being the one to show that this is so easy. Go ahead and share your screen with us, Kumar. You go ahead and pick your favorite pair, something that you feel that you've marked up and you want us to see something.
I'm so blonde. I just jumped off. Did you see me just like jump off?
I did. I was like, okay, good night.
I was going to ask you where you were going.
It's only 7:27 here. This is so weird. I guess I can go outside and chase bears.
Oh, don't, please. Watch out for
Those are some big bears there, Kodiak. They'll be chasing you.
Y'all know I was in Afghanistan chasing jackals and camel spiders. That's how I broke my phone, chasing stuff in the desert. Yeah, if I see one of these, I'm either going to play dead or learn how to fly. They said they can run like 35 miles an hour.
Yeah, they're very aggressive. Very. So Kumar needs a little second. He's on his phone.
Oh, Kumar said he's on his phone.
But he's going to do a switch, though, so it's okay. Is anybody up to do any in the meantime? Don't be shy if you want to show us something that you've learned on your chart or you just want to have a question. Because if, Kumar's there, but when he's done, if you have questions, getting clarity could be the thing that leads to you being profitable. So go ahead, Kumar, you can unmute yourself.
And trust
All right,
me, we don't talk about anybody's charts because we.
There we are. Now, can you guys hear me just fine?
Yes, we can.
Cool. Where is it? Cool. There we are. So if we're doing this, go over here. Do that. Yeah, just keep it as that. Get down to the weekly. Go down to. Okay. Oh boy, go a little bit more recent.
You sound like the chart whisperer.
That's pretty much what I am. I'm always talking to myself when it comes to marking out my charts. So there we are. One thing I've personally gotten used to is I'm trying to get used to wick, but it's I don't know why, but I prefer body to body when it comes to drawing lines. So from what?
Yeah, and you're not wrong if you use body to body. Some people do body to body.
Personally,
to me a wick is a
body? What's that? What's body to body?
So body to body would be for example, you see how I'm not I go through the wick, but I let the body respect the trend line instead. That's something I personally do. From what I hear, it's really based on style, not necessarily because you can do either one, but it's just a matter of preference. We go down.
Got it. Okay, cool.
Just a minute. So currently this is where it is. Looks like we are getting probably that extended look. Yeah. Go to 5. And then, okay, let's clean up here.
Oh yeah, we usually just talk our way through it and tell everybody what we're doing.
All right, I'm done.
So can you let us know what you did, oh magical chart whisperer?
All
That's
right.
your new nickname, you know that, right?
So pretty much what I did, kind of been doing it as a recent ever since Gwen mentioned it, but I like to do the whole boxing. I like to find out what my highs and what my lows are, just long term. And then I kept on going down, just seeing, where the major highs, where the major lows in the market when it comes to bigger time frames. And as I keep on going down, I just mark what what I see as the current trend. This actually looks like.
Dang, look at that MACD on that daily. Ooh.
I know, right?
Oh, for those of you who don't know, when gas and oil prices go up, the Canadian dollar goes up. So if you see the gas and oil prices going up, CAD is going to get stronger. So you could see a sell on USD CAD when that happens.
Yeah. So yeah, as I keep going down, I just keep on with more recency, just identifying the trend, seeing where price is going, and as I break it down, like you guys just saw, I would just keep on drawing the trend lines, identifying the trend until it comes until I come down to pretty much
So right now, are you looking for sell opportunities or buy opportunities?
So okay, so let's see. Right now, I would look for a sell until it comes to the trend line. But at the same time, there is this right here as well. Well, yeah, I'd probably go for the pullback. Cause in the right now, the pullback would be what?
Go back, pull back to your daily for me.
Yeah. All right. So
see that channel you're in on your daily. Straighten up your trend lines, and you'll see a good channel right there on your daily.
So kind of like that.
Yeah, pull it back down to where you had it, right
over here.
Yeah, and pull the top up a little bit.
Okay, I see what you're saying.
Ah, there you go. So how many pips are in that channel?
If we're going,
I like inside the whole channel.
Inside the whole channel.
Yeah, like if you were catching the whole move, from top to bottom.
That's why. 580.
No, like
Okay, you mean from the bottom to like up
yeah,
here?
like if you caught that last buy, that push up from the bottom to the top.
Oh, okay, perfect. Then
There you go. So you could get like a little over 200 pips each way in that channel. Me, I would be looking for the sells because you see at the top you have an impulse, and this is just a correction.
yeah. Okay, I see what you're saying.
All right, now go back out, zoom out on your daily. Draw a Fibonacci from that impulse down to the bottom where it started correcting. Let's see how much we've gotten. So it's at your 78. And it's, right now it's rejecting near your 61.8. Yeah. We could see if it doesn't break out of the bottom this time, we might get a push back up to the 78. See, I would think it was going to come all the way back down to that channel.
Yeah, I was thinking it would come all the way back down as well, but yeah, I pretty much didn't.
And that was news that pushed it up. But you see it didn't break out of that channel.
Yeah, exactly. It still stayed within the same thing.
Yeah.
So yeah, I would say like what if we're gonna I would personally wait to let it come down to the 618 and then let's see if like
What it's going to do there.
Yeah, see what it's gonna do there. That's what I would personally do. Like I would just like wait it out because
If I wasn't already in it, I definitely wouldn't get in now because it's in the middle of nowhere.
Yeah, exactly. And for it's kind of it's I wouldn't get in either unless like for example it like pulls back up a little bit, like it comes back up here to like the trend line, then might get what a 40 pip move, which is like okay.
Zoom out to your 1 hour for me.
1 hour, yeah.
See, if you had drawn a trend line from the bottom of that channel up to where it rejected, you could have caught that break. All right, draw a trend line right there at the bottom.
So like right here to like here.
Yeah. And now go back to your 15-minute. And you'll see where the 9 and 50 crossed and trend line broke.
Yeah, I see what you're saying. Where is it?
Right there.
If
Wow.
I caught it right there, would have caught.
Beautiful one.
That would have been a great catch.
Yeah.
That would have been a great catch.
Yeah. So you can draw trend lines inside your channels to know when to jump in.
Okay, fair enough. 63 pip move would have not been. I'll take it definitely.
Slap a standard on it and call it Christmas.
Slap a stand. Well, if my account was able to hold standard, I mean, I'd be with you there.
And you see how your MACD it's pulling up to your histogram.
Exactly. Yeah,
So
I see.
It'll pull up to your histogram, your EMA.
And then I would expect a drop.
And that'll be your drop.
I would expect a drop. Yeah, because the histogram will cross over like maybe a little bit over the zero line.
It could reject it. It's at its last push in this little, unless it gets a huge breakout. Now let me show you one more thing. Go to your weekly.
Yep.
Because I got this pair memorized, which I hadn't looked at it. I hadn't traded it in a couple weeks.
Honestly, UCAD's my favorite player because, obviously being from Canada, not only does it help me kind of, where the Canadian dollar is going as well.
We expect you to give us, some heads up. Hey, zoom out and pull your MACD down a little bit so you have more chart. Now, delete everything off.
Okay.
Do you see that channel on the weekly going up?
I do. Yeah, and this is exactly, so it would go, impulse, continuation, another impulse.
Correction, there you go.
Another correction.
Voila. Now, boy, when we get that breakout.
Yep, pretty much. Where is it? Daily. Yeah, UCAD's just been kind of like, honestly, like Stevenson was saying it like the whole entire time, and I'm just like, it looks like it's gonna go up one more time before we actually get that.
Yeah, I could see it
break.
going up one more time. That's what I said. I could see it going up one more time. I thought because you see coming off that daily, how you had that bearish engulfing coming down.
Yeah.
I thought that was gonna be the final break, but with oil going up, with oil and gas going up, it could push up one more time.
Yeah. Yeah, because if we get that downtrend, like let's say on the weekly, that's what if we hit that new low, like right here, and we go from the high, that's what an
It's only
1800.
Yeah.
It's an 1800.
That's what we're hoping for. That's why I really wanted to push up one more time.
Yeah, definitely. Now, Gwen, just to ask.
Hey, look at your weekly MACD. It's not trying to go down.
No, it's not. This is what I mean. Like it hasn't crossed since like literally going into the channel. Hasn't crossed until like right there. Huh. Well, we'll see what happens. I'm kind of waiting this pair to drop. I'm just waiting. I really want to drop, but
I used to get confused when Linda was like, "I'm hoping it pushes up one more time." I'm like, "Dude, I'm trying to sell it," but now I understand what he was saying because you get a better position from the top for a better sell.
Exactly.
And look, you got engulfing candles going up on the daily. Yeah.
That's it. I know. Yeah, it's definitely. It definitely looks like
I think when it gets to that trend line, it might go back up. But it's a good 200 pip drop where you caught it. So if it breaks, so we could see it. We could see it just come down, hit that trend line, and go back up. That's why I said I would not get in a sell right now if you're not already in it.
I wouldn't. Yeah, I wouldn't get in a sell right now. I'd personally wait. Like I said,
on that trend line, you got impulse correction. That was your continuation. This is a second correction.
Clearly, impulse. You know, get our flag coming in right now.
Yep.
And yeah, I'd personally wait until we get trend line, see, what it does from there. But from what it looks like, especially on the higher time frames, it looks like we're going to get that push up. So let's see. We're going to get the push up. How many pips would the rest of the move be? Probably a good bit. 400 pip move.
Yeah, that was
400 pip. And then we just take the ride all the way down.
All right.
Now, Gwen, do you have any tips for me?
Well, that was it. I just wanted you to see where you were in the market and why it could push up.
Yeah.
Like on that weekly channel and on that 4-hour channel. So on the 4-hour channel, you could get a rejection to the upside, and also on your weekly. That's why you should always know where you are. So if you were trading off of a 15-minute chart or a 4-hour chart, you wouldn't have seen any of that. That's why we tell people look at the monthly, weekly, and daily first. They're the 3 most important time frames.
100%. Yeah. Definitely will. No.
All right. Do you have any questions before someone else marks up?
Okay. So pretty much, I guess like even with the EMAs, like for example, when it crossed pretty much around this area right here, when you saw price like pretty much go above, that's the signal, that's the confirmation for like the buy.
And it look at your bottom at your MACD as well.
Yeah, and bottom of the MACD, so that means it was going up. Okay, fair enough. So it's like if I use the EMAs in conjunction with like the MACD, then I will be
like double confirmation. Yeah. Just remember, the MACD is all about volume. It tells you who's in control of the market at the current time. The darker green. Good night, Earl, and thank you, Nor. The darker green shows a stronger bullish. You see when it gets lighter green, it goes down into your red. That's your pullback.
Yeah.
All right.
Okay. All right. Thank you, Gwen.
All right. Thank you. Great job.
Thank you.
Anybody else want to mark up one before Mahogani takes us into mindset?
Yes, please.
You gonna mark up Matthew? Woohoo!
Yes. Come on
Yes,
now.
ma'am.
Yes. I'm letting you guys know that when you guys mark up, other people are going to have the same questions that come, or you may answer something in your markup. So please.
So
Hello?
want me to go ahead and share?
Yes,
Yeah.
please.
Okay.
Get rid of all the crazy stuff before you show your screen.
Oh, I don't have anything crazy.
Yeah, this is why we call it Forex and Chill. I feel weird doing Forex and Chill with the sun up. This is crazy.
Where you at?
I'm in Alaska this week. Last week I was in Myrtle Beach. It's a big difference.
That is one hell of a difference.
I have a question.
I live there.
Go ahead.
On this, should I connect it from here to here, or I see it's starting to be a downtrend, right? Or should I go from top to bottom?
I would do my most recent low, which was at the bottom.
Okay.
Right there.
Right here? Yeah, right.
And the most recent high. Oh, you're going to do the trend lines, or you're going to do the horizontals?
I guess I'll do the horizontals. Let me.
You do what works for you.
I mean, you mean like the channels?
Yeah. Trust me, when you try it, you'll like it.
Okay, so with the channels, just start from the bottom and go up, or just
go to your very bottom one.
Okay.
And then that most recent high.
Which is here. Right? Uh-oh.
So what we were using was the horizontal ray to just mark our bottom and our top.
Oh, okay.
Just to give us a support area.
Oh, okay, right. I got you now. I'm with you. So, and then just to here. And then, okay, I got you. And there, right?
Yep, now you got it boxed in on the monthly. So go down and box it in on the weekly.
Okay.
Okay, you see where your low is. Go to your low.
Right here.
Mm-hmm.
And then just do the same thing?
Yep, put one there.
Okay.
And you can pull it left if you want to. So you can see it's bouncing off that same area where it went up the last time. Just drag it all the way down. Right there.
Here?
Yep. Now the one that you put at the top, bring it down, and I'll show you where my eyes are going to.
Okay.
Not the very top, that one you just put in the middle. You don't need it. You got an extra one in there. You can just drag it down.
With this one? Okay.
No. Go, put that one back. It was in the perfect spot. The one right above that one.
Oh, you mean this one?
Yeah.
Just drag it down. Oh. Right here, right?
There you go. Mm-hmm.
Okay.
And then go on your daily and look for your trend line.
Okay.
And remember were you on when I covered this pair earlier? There you go. It's in a channel going down.
Right. So should I use the trend line, or should I use the horizontal? I mean the
I drew the channel because I know it's a reversal channel.
So I'm gonna use the parallel channel. Would that be better?
Draw your trend line.
Okay. So I use the trend line from here, right?
Yes.
To right there, like that, like so.
Drag your chart over to the left so you can bring it down. Yeah, bring it all the way down to that zone.
Okay. to here.
Yeah, I wouldn't cut through those 2 candles at the top.
Oh yeah, I didn't mean to do that.
That's okay. There you go.
Oh, right there.
Yeah.
Okay.
And you can also draw a trend line at the bottom of that same channel.
From here going up.
From the top coming down, so you'll have like a channel coming down.
Oh, you mean like from here going down?
But on the bottom side.
Here. Let me move this over so I could.
All right, let's do it this way. See that trend line that's right there at the top?
Yes, right here.
Drag it down. Just drag it straight down.
Oh, you mean from here?
You're going to make another one just like that, but in the bottom of this channel.
Oh, I dig it.
There you go. There you go.
I'm with you. I'm with you. Starting from right here. And then like so.
Yeah, and you could actually start it at the candle above. You can extend it up a little bit. Don't cut through your candles there.
Yeah. To the wick. Uh-oh.
If you pull it straight out, there you go. Now pull it up some. Right there. There you go. Now you see the channel that you're in?
Yes, ma'am.
You would be looking for buys at the bottom of that channel. And you see that channel is coming into your weekly zone with your red horizontal ray down there. So zoom out just a little bit. Hit your minus button. And now drag it up a little bit.
This? Okay.
Yeah, drag everything up. I mean, drag your whole.
Okay, my bad. Let me just put
You're
that.
good. It takes some getting used to.
Yeah,
Anytime
because
you do something you don't want to, you can hit the undo button or Control Z to undo it.
okay. See, I was trying to figure out how to drag everything up.
Go to your right where your prices are.
Mm-hmm.
And just click and drag that a little bit. And click in that area. There you go. Now you can move your whole screen. Like go back and click on your screen. And you can just
snap.
Hit Control Z.
Control Z, okay.
That would have fixed it. Do it one more time. There you go. Click in the empty spot and just drag it up.
Ah. Gotcha.
So yeah, just your trend line at the bottom of your channel is a little off, but now you see where you are in the market with this. On the daily, you are in a descending channel, which is also a reversal. And you see it's coming down into your weekly low.
Yes.
So you could start looking for a reversal unless it breaks that weekly low to the downside. But we don't trade off the daily, so you can go to your 4-hour and see what's going on there. But that channel is very important. All right, now hit your reset button or your refresh, the little round to the right there. All right. So you see it's already starting to push back up to the top of your channel.
Mm-hmm.
All right. Which EMA are you using?
See, I didn't know, like I knew to use a 9 and a 15, but I didn't know how to get to it.
Okay, 9 and your 50. Okay, go to indicators. Click where it says indicator. And type in moving, and you'll see it come up. Exponential. Click it twice. Yeah, click it twice.
Oh, okay.
All right, now click X. And over at the top where it says Euro USD, click that plus button. Oh, you got a lot of EMAs on there. You just got them hidden. You can delete the ones you don't want or the ones you don't use. And you can save this as a template. I'm going to show you how to save this as a template.
Okay, so
just click off everything except the top 2.
Gotcha.
All right, the top one, go to your settings. Click the eye so we can see it.
Okay.
You have it hidden. All right, go to settings. That's the button in the middle.
Oh, okay. Gotcha.
All right, make it whatever color you want. I use blue, but you use what is best for you
Blue,
to let you know that that's your uptrend.
Blue will work for me too.
All right, so change it to blue. That's like a teal green.
Okay.
And if you want it thicker, you can make it thicker down at the bottom where it says thickness.
Here.
Click back on that. Yep, click on that again. See at the bottom where it says thickness? I wouldn't make it that thick. Then it's going to swallow your candles.
Here or here?
Yeah, either one of those is fine.
Okay.
All right. Now close that one out. Now go to your next one that says 9 EMA. Go to your settings, just click that. And you can make it red. You can change your thickness to at least 2 or 3, it's up to you. And go to inputs and put 50.
Okay.
Okay, click OK. And if you want to add the MACD, go to indicators. And type in MACD and choose the very first one. All right, you got.
Yeah,
Oh, you put it on twice. So yeah, take off one of them. Just go to where it says MACD and click the X. Go to your left.
Oh, okay, I see.
Now at the top where it says templates,
Mm-hmm.
click that and put save, and you name it whatever you want to name it.
Okay.
You want to name your You want to name your EMAs. You want to name it 9 and 50 or 9/50. You're not. You're naming the indicators to use in the future.
Gotcha.
And click save. Oh, don't click that. If you do, it's going to make it go to the 4 hour every time. Click save. Now go back up to templates. And you should see it there where it says 9/50 if you put a star beside it. Now up at the top you see a 9. Anytime you want to default to that, you just click the 9 up beside templates.
Gotcha.
All right.
Yeah.
All right, now you have your 950 cross and your MACD. All right. Now you see at the bottom, it hasn't crossed your MACD yet. Let's go to your 15-minute. Now at the bottom, you see where you had it cross your MACD and your 9 and 50. That could have been your entry for a buy.
Mm-hmm.
And if you wanted an early entry, go to your 5-minute. And you'd have gotten in just a little early. All right.
Gotcha.
And how many pips would that have been if you got in at your cross?
Which one? This one or this one?
Yeah, the first one from the bottom. Because we were looking for buys because we were at the bottom of our channel at a demand zone.
So start from here all the way up?
All the way, just go straight up to that first push. So about 34 pips.
Yep. Yep.
And right now it's correcting. All right. So that's how you would use the 950 and MACD for an entry. And always trade with the trend unless you are in a bigger time frame, like we were showing the daily versus the weekly earlier, and you catch 200 or 300 pips on the correction. The only time I trade a correction is if I'm expecting a really big correction.
Gotcha. Gotcha. So even
like on a 50 pip move, you might only get a 10 or 20 pip correction. You don't want to get caught up in that. To me, 100 pips is a scalp.
Wow.
So you want to get to where a scalp is at least 50 plus pips. I'm not going to jump in the market for anything unless I see about 100 pips ready to pop off.
Yes, ma'am.
All right. Anybody else got any questions?
I just want to remind everybody that when you don't mark up, and I've been there before when I didn't mark up, and I don't mark up, you know, it's a confidence thing. And the more I would mark up and I would be able to show other people my markups, it does increase your confidence level. So I just want to thank, was that Matthew?
Yes,
Yeah.
it was.
Thank you so much for getting up here and doing this, because this is how you grow. This is how you become to that, you get to that next level.
I must admit, I was a little skittish because I wasn't really familiar with Tradingview. So I was like, oh man, I want to get on there, but I'm glad I got on it.
Let me tell you, when I first started, it took me forever to mark up a chart. Now I'm like, if I can't mark up a chart in 30 seconds or less, there's something wrong. But Miss Tiny, no, actually, if you can draw channels on any time frames. When you saw me drawing the flags, there's a little channels on the flags where you can buy or sell the breakout or buy or sell from the bottom of the flag. So you can get channels on there's any pattern that's created can be created on any time frame, from the 1 minute to the monthly. Patterns are on every time frame.
I got a question that's kind of been sitting with me.
My ex said that one time.
That'd be kind of funny, right?
This is ForexNChill.
Right.
All right, go ahead.
So, like, when you are marking up, right? And I'm trying to see if I have anything to put a visual to it, but let's just say that you have a trend line going up, right? And then you have you mark up your pattern, and you have like basically the market going in like a descending wedge through your trend line going up, right?
Okay, let's look at your descending wedge.
You pay attention to the pattern that you're in, that over, because what was messing with me is, I think it was a situation with SB5, like the pattern went over the uptrend line, and it was like, do you look at it and say, okay, this is a break retest because it broke my uptrend line, or do you look at it and say, okay, yeah, it looks like a break retest, but it's still within my pattern?
Let me see if I can draw out what you're saying.
Let me see. Like, if you want me to share my screen, I kind of got one on SP5.
Okay. Let me stop sharing and you can share.
This is kind of one.
And remember, indices, they usually follow market structure to a T, and they won't have as many patterns as a pair will. Indices move a little bit different, but they do follow market structure.
Yeah, I haven't really. This is Leah. I don't know if you remember me. I'm still in Clint's private group, in the one-on-one. I'm about to graduate.
Woo woo.
So is my screen shared? Did I share it? I'm sharing it now. Can y'all see?
Yep, we see it.
Right. So this is hypothetically speaking, right? But let's just say I'm gonna get rid of this real quick.
I see what you're saying. That was just a descending flag.
Yeah, but I'm just saying, like, let's just say that all of this came out here, right? And this started to look like a break and a retest of this trend line. And based off of what we know, it'll be like, okay, wait for the retest, wait for the break. And this would probably confirm that it would be on a downtrend, but you would pay attention to the overall flag more so than paying attention to this trend line, correct?
That descending channel lets me know that it's going to shoot back up, even though it did break that trend line.
So just pay attention to the
pattern.
Because
stuff can consolidate sideways, and I'll show you. Like, pull up GJ. like GJ broke the trend line, but then now it's consolidating sideways. So we could see it go back up, even though, in my opinion, it was going down. But see, if you go to GJ and draw a trend line to the upside on the daily. Sometimes a trend line will get broken due to sideways consolidation.
That is true.
But that doesn't, sideways consolidation does not invalidate a trend.
What time frame are you on, man?
Go to your daily. You see that trend line to the upside? And when it broke it, now why are we getting sideways consolidation?
Mm-hmm.
So if you draw a trend, draw a zone at the bottom there. All right, take off that top trend line.
This one?
Yep.
This one?
Yep. Hey, Mahogany, somebody's walking with their phone in the pocket or something. Can you mute them?
I was trying to find out.
And take off that daily trend line, and you can put another.
This one?
Yeah, another one going up because it's been invalidated.
Yep, that's been broken.
Now just put a trend line at the top of that zone. Now you just got sideways consolidation.
So
it could
on here.
No, just like at the very top of it, showing that bounce where it's bouncing in there.
Got you.
Pull it down to the top of those last two retests.
You're going down here.
Yeah, so you got sideways consolidation going. So it could push up again until it breaks out of that zone. And GJ did that one time before for about 2 weeks, and we were catching like 200 pip moves to the downside every time. But that's like on the daily. So you just got daily consolidation going on.
Got you. So it could either do this or push back up.
Right.
Got you.
Yeah, sometimes trend lines get broken and people jump the gun. It could be sideways consolidation because you do have a bearish engulfing, so you got an impulse and sideways correction. But until it breaks out of that, I would be very careful of that zone until it breaks to the downside. Because how long has it been inside that? Go to your first candle inside there and see what the date on it is.
This one.
Yeah, look how it's been in there a month. It's been going sideways for a month.
Wow. Gotcha.
So it hasn't made up its mind. And with JPY going on holiday, we don't know what we'll see with it.
Yeah, I got that little memo like in 7 different chats.
Yeah, a lot of times at a demand zone or supply zone, you could see sideways consolidation. And people were thinking the trend line's broken, but it's just consolidating. And how many pips is inside that consolidation? Because that's a big zone.
Yeah. 300 pips.
Yep, so you could see it push up again. So we'll just wait and see. You start looking, let's see what your 15 minutes looking like. So right now it's coming back down to that trend line, but we'll see if it respects it or it goes back up.
Gotcha. Let's see something.
If you had caught it at the top there, look at that 9 and 50 cross. You got a beautiful
15.
impulse correction. You got like 3 entry points there. So you caught that move.
To the downside?
You go back to the top where it first broke down.
Right here.
On the top of the channel. Nope, even higher than that. See right there where it broke?
Right here. Gotcha.
So you had a double top. You see that W?
Mm-hmm.
Then it broke down. You could have caught that first one where it rejected. You see where you had that first cross and it crossed your MACD as well?
Right here, down here.
Yep. So you could have caught it from there all the way down. Then I see 3 more entry points after that. See where you had your little flags created and your crossovers?
I ain't gonna lie to you. My eyes ain't that trained like yours yet. They're getting there though.
Hold on, let me see if I can write on your screen. I can't. I'm not the host. Can you write on the screen, Mahogany? And show it. Do you see them?
I do see it, but I don't see where I can mark up on the screen at. It's not giving me control to actually.
Annotation. All right. I can tell you now. Go right there. Go to the top. And go. You see where you had your first cross, where your red went on top. Go to your right.
Mm-hmm. Right here.
Go to your right. No, we got to retest after that.
Talking about the first drop right here, right? In this cross.
No, your second one where it retested. Go back up to the top. We're at the retest right there. All right, where it came down, you see your 9 and 50 separate, and your MACD went back under.
Mm-hmm. Right here.
All right, go down a little bit. Right there.
Got you.
You could have entered there. Then at the next peak sticking out, you could have entered there, and then you go down about 100 pips at 146. You could have entered there. Go up to where you're right there. You could enter right in there. You see where they separated?
Mm-hmm.
And if you look at the bottom, you would probably see your MACD cross. All right, drag it to your left. Yep, you see your MACD cross right there when it went down? Right there.
Right here.
Yeah.
Mm-hmm.
All right, scroll over to the right. The other way, the other right. And you see right there, you had another one. It corrected up. It broke out right there when your MACD, your EMAs crossed. And if you go to the right, I see another one. And that was your last one. Right there. And you're actually getting one happening now. So those would have all been entry points.
Got
if you caught this last one, how many pips would that have been? Like the one in the middle, if you had caught it there, how many pips would you have gotten?
This one or this one?
Yep, right there in the middle. Yeah.
180 pips. 185.
Not bad. But you see the perfect flag there.
Mm-hmm.
Going to the side, and then it broke out again. Pulled up, gave us a little ascending channel, and breaking down again.
Yep.
All right.
That's
Anybody
beautiful.
else got any questions?
Like, when can I show something that somebody asked me earlier?
Go for it, Eric. Eric's killing the market.
Real quick, I want to just,
you
hype you up for you guys, but I have this up already, but you guys should check out this video that she has on her ForexNChill, our channel. I was actually rewatching it today. But it's good on entries and stacking trades and taking profits.
Awesome. Thank you. It's been a while since I did that one. Time for an update.
Yeah, this was what, January 27, 2019. But it's new to me. But all right, guys.
All right. Eric's going to share his screen and answer a question. Eric's one of our senior traders. He's killing the market.
Yes, it's actually dealing with gold. Gold did a reversal this morning early. So I'm going to go ahead and mark it up. I'm going to box in my price on the monthly. We'll go down to the weekly. Look, I don't like anything that I really want to put a trend line on, but I will look back at price. At reversals, there was one here. If you look back, there's one here. Because if it dropped there, up there, I usually put max of 3. I'll put one there. Then I'll go down to the daily. And now I'm actually looking for, let me remove, I like to do it naked when I'm doing all my, there we go. I like to do mine naked when I'm marking everything up. So I'm a box in price. Right now we're in a nice sale on the daily. I got on my 4 hour, I'm still in a nice sale. I'm not gonna worry about adding another trend line because if you look, we're in a nice correction here. It's actually a 4 hour correction. So if you come to, because a 1 hour correction is around 150 pips. This was actually 300 correction, 330. So what someone asked me was, if you've seen right here, this was news this morning, and they were asking me how was I still in the trade. I have a unique way that I actually run my trades. I don't pull my stop loss super close to a trade, and the reason for that is because of news like that. So basically, all I do, I got in here, but I put a standard and then $5 on it. So 0.50, I put 10 and $5 on it. Then we got that was the impulse. We got a correction for a flag. When we got that correction for a flag, I went ahead and threw another standard and 50 cent there. And once this impulse happened again and we got this correction, what I did was I waited. I brought both my 50 cent up. I held my actual standards down here, and when this came up to here, this dropped. My actual stop losses were right in this area right here. That's what these here two were. The 50 cent were moved up. Both of those got knocked out, so I made profit on those. So right now I'm in the good. I'm in the good. I'm not worried about being in a loss, because now the market is actually paying me for being in it. So all I did right now, when this went back up, I took both of these and I moved them to the next flag. And so with this flag, I'd always try to keep my big ones, my standards, running actually 2 flags behind, because I'm already in profit on the 2 up here. Someone had just asked me that today, and I just wanted to clarify how I kept because they said they got stopped out in the trade, and I said, well, I did get stopped out in the trade, but only my my profits, because I'm actually buying here and holding all the way up. On every flag, I'll add another position. I'll
And
actually add 2
for the
positions.
new people, what he's referring to is called a trailing stop loss. And where he's adding new positions, it's called stacking. And what he did in the beginning, where he opened a 1.0 and a 0.50, that was twin trading. So twin trading is when you open 2 positions at the same time. Stacking is when you open a position, and as it goes up, you create new positions. And trailing stop loss is when he's moving his stop loss up right below the previous flag.
But I'm actually killing this trade here, because I'm actually going for for these, I'll put them in the small lot sizes, like $2.50. I don't mind running that 80 for $2.50. That's I am I'm a position / swing trader, but I'm also an aggressive trader. I can take a $1,000 account and I'll double it in a week. I took a $3,000 account this week and doubled it off of just this. So that's how aggressive I am when I'm trading. So I'm looking at, by the time this actually reaches the top, I should be turned that what is doubled into now. It should be double that again. I'm just an aggressive trader because I think you asked me
When
one
you
time.
learn, yeah, when you learn where you are in the market, guys, you'll be able to do that. Don't try it until you know where you are in the market.
Yeah, if you get lost in the market and you try it, next thing you know, you're thinking of buy and you're in a sell, and everything you just did went down the drain. But that's what somebody just asked me. How did I stay in that trade when they got stopped out? Because
yeah, you can't put your stop losses too tight on volatile pairs, because your first two pushes won't pull back as deep as like your third. You're going to have small pullbacks and then you're going to have deep pullbacks. So don't run your stop losses too tight. Always give it room to breathe if you're swing trading. You can run a tight stop loss if you're scalping, but swing traders, you have to have breathing room.
And that's the reason I do a double lot on each one of them, because one of them is my carry ahead, let it go ahead, and I'll let it get as close as it can. It can get stomped out. I really don't care, because I was going to sell it off anyway. That way that by the time I hit my second flag, I'm $1,000 in profit, and what I'm trailing is just bank. You just hold on to it. And so all I'm doing is I'll set alarms on these trend lines, to where if that breaks back down, and I'll actually pull this trend line even further out like this, so that it's not really touching. And only do that, but once it gets close to the top, I'll actually move it closer, so I'll know when it's going to break that trend. But the only reason I do that is so it'll alarm to my phone, and I can look at the chart really quick and see whether it's going to just turn it on me, it's going to break down. And then these back here, I'll go ahead and sell them all. I'll actually close them to make my money and get out of the market. But I'm looking at this to go all the way up. This will go all the way up. Then we're going to have a really nice sell-off, because that's the third one. If you look, that's actually the fourth one. So we should have a nice move for at least 500 pips, 520 pips right there. I'd rather for it to go, because it'll probably get there and it's going to do another correction. Because we got a long ways to go from where we're not even midways yet from where the market, midways the market yet.
And if you draw a trend line on the bottom of that, that's a channel too.
Yeah, that is a channel. It should come on down. But that's all it was. That somebody had asked me that question, and I was trying to explain it in the text, but it's easier to explain it like that. That's the reason why, because I'm not really concerned how far those two are back, because I'm so far out of danger then that I can manually close them, and I'm not really worried. And I have alarm set, so if it comes back on me, because once it goes to that second flag, I'm not really concerned, because I've already got my profit off of my two that I used as sacrifices, is what I call them. I sacrificed them to make money on that uptrend. So that's all it was. So I'm going to share it back to you now.
All right, y'all. Y'all see that gold trade setting up. Anyone's got any questions or want to share anything before Mahogany takes us to mindset?
Just want to say thank you, Gigi.
You're welcome. Thank you for joining.
I'm sorry, what you guys
How
said?
was Alaska?
The sun is shining. It looks like the middle of the day. It's very bright. I think it won't get dark until about 11 o'clock tonight.
I think
Quick fun fact: my dad is military. I
24/7.
lived in Alaska for a while.
Be there when you'd only have like 2-hour nights.
Yeah.
I've been watching too many of those movies, like 30 Days of Night.
Are you in Fairbanks or in Anchorage?
Kodiak.
Oh, wow. I never heard of that one.
That's where the Kodiak Bears are.
I'm on a
secret
mission.
It's an island, Kodiak Island. They got an island there.
A lot of fishers here, a lot of fishing boats, and a lot of hunting elk and bear. A lot of bear hunters here. It's overpopulated with bears, big bears.
Mm-hmm. And
all
moose and elk and all that.
So, Miss Mahogany, if you want to close us out with mindset.
Okay. I definitely.
I'm going to eat my potato chips in the background, so I'm going to mute.
You're so funny. I was eating some potato chips earlier, and I don't even eat potato chips. And I was thinking, oh, Gwen, next time I want some ice cream. But everybody, this is the portion of Forex where we talk about the other component of trading. And the other component of trading is actually our mindset. We always talk about getting this whole learning the skill set, and we want to learn the skill set, and we want to mark up charts and all that kind of thing. And then we start doing that, and then we wonder why, as we are trading, we lose a trade and we want to quit. We lose a trade and we get mad. We lose a trade because we over leverage, and you know I'm losing all my money. We put in trades from other people and don't take responsibility for it and blame them for our losses. This all has to do a lot with mindset. And not just mindset in a kind of a way where we are, it's not mindset in, positive thinking, but also mindset in the whole way of how we are understanding how the market works. And I'm learning that if you guys are reading the book, Trading in the Zone, the way we think in the world and taking that thought process to trading is completely, utterly wrong. I say that because when you're reading the book, Trading in the Zone by Mark Douglas, which Gwen has placed in her Telegram group, it's also in the Trading Library on Telegram. In reading that book, we try to take how we think about the world, how we people talk about risk is bad, and we want to we're adverse to risk, and then we want to feel that way when we come to trading. But the number one thing when it comes to trading is to accept risk. Yes, you learn to minimize it, but you have to accept risk because you're getting into an investment where risk is part of the deal. In any investment, risk is part of the deal. There's a saying that if you have never risked anything, you'll never be, what is that? If you never risk anything, the possibility of you actually becoming wealthy is very minimal. People who save everything and don't want to risk anything, they never get rich. And that's the thing that it comes in trading. You have to accept that there will be losses, which is why when you say, okay, I did my risk management and I have done it to where this particular trade, if it goes south, that's $40 going south. Sometimes they say start your trade with, you know what, I'm giving that $40 away. I don't even care about that. You have to accept that if you've done your risk management correctly, that is part of what you are signing up for. So mindset when it comes to trading is like so big, so very big. what I want to do is share my screen because I have wrote some things that I wanted to talk to you guys about that I felt that was very, very important for you guys to understand. And it's something that also, I mean, I listen to Les Brown, I listen to Abraham Hicks, I listen to Oprah. I have all these people that I listen to that I really do feel are great people who share their whole thought process about mindset. And again, as I said before, this is something that when it comes to trading, you definitely have to be aware of. The broke mindset. Speaking, I don't have money. I never have money. Everything around me is always, you know, is never good. It's, you know, I don't know where I'm going to find money from, and things always go wrong. Those are the type of things that you have to let go. Because number one, you have to believe until you know. You have to believe that Forex is the way to your legacy change until you're able to know it. And I say able to know it because that is when you start making trades and you start winning more than you lose. Or if you start winning at least 50% of your trades, I mean, you're considered a good trader risking if you win 50% of your trades. You're considered a professional trader if you win 70% of your trades. So believe that I can be a great trader. I am a great trader until you know that you are a great trader. That is a very big thing. If you come at, this is so hard and I can't do this. And if you let those negative thought forms win, it is almost going to be impossible for you to sit in front of a chart and have a positive attitude or have confidence in your chart marking, have confidence in hitting that buy or sell button, have confidence in that stop loss. It's going to be very small if you're having these negative conversations. So you have to believe until you know. That knowing will bring absolute knowing. Like, I'm going to say this, it's just, there's an absolute knowing that when, like a skin color, I'm going to take black people, for example. There's an absolute knowing I am black. My skin color is black. And people say brown, people say caramel. I'm just using the word that people typically say and people accept. There's an absolute knowing when you say I am a female. There's an absolute knowing when somebody says that I'm a male. There's an absolute knowing. You have to have that absolute knowing when it comes to trading. You have to stand firm and within what you know. If you know that you know how to draw trend lines, stand firm on that. Don't sit there and waver. And then if you know that you're really good and you have this down pat, don't let somebody come around and question you and then be like, oh, okay, well, I'm not for sure and they've been doing this more than I have. No, if you know that you're good at it, stand in that. I didn't say be closed-minded and not receive information that could possibly help you do better, but be confident and stand firm in what you do know. If you know how to calculate pips and somebody says something and you know that doesn't even make sense, in a polite way, correct them because you know. Don't sit there and question yourself and, well, maybe I don't know. No, stand firm in what you do know. If you know your zone area, don't let somebody else question your zone area. And don't second guess yourself. Now, if you're already second guessing yourself, maybe you want to go back in there and check. And then you get some more information so that you can be really firm on that. But if you know that you know, don't let nobody come in there and push you off your game. This is mindset and training. You have to recognize your yes power. If you came into Forex and you have said, yes, I am going to commit to learning Forex, don't let somebody else tell you about something else and then now you start wavering on why you joined IML. Don't let somebody come tell you about how that's a scam as they are not living their best life. Stand in your yes power. You said yes to learning Forex. Stand in that. You have to understand this. This is your mindset. Don't let anybody allow anybody to put anything into your mind. If you're not gonna, why would you allow somebody to say something to you and put something into your mind that you wouldn't even do to yourself? I mean, and it's a thing already that we sometimes live from a place of no. We say no to everything. When it comes to this whole mindset and trading, you got to start saying yes. You got to let go of those limiting beliefs. You got to let go, I cannot do this. You have to let that go. Because if you're on this call tonight and if you were here, you are doing it. You got to let go of those no mind thoughts. You got to let go of this is hard. You have to let go of I'll never get. You have to let go of all those little things. Yes, I am doing this. Yes, I'm willing to put in the time. Yes, I can do this. Yes, I'm understanding this. Yes. And really, bottom line, I've learned that no is you don't feel that you deserve it. I mean, don't you know you were born with abundance? You were born with permission to live a certain type of life. You were born with permission. We sometimes feel that we deserve poverty mindset. We deserve not to have everything going well for us. That is so far from true. Live your life from that power of yes. And you have to turn it on sometimes. You have to turn that power on. Turn it on by saying yes to yourself. Turn it on by showing up to ForexNChill. Turn it on by showing up to all those different trainings we have all week long with Lindor. Turn it on with the training, going to IML TV. Turn it on by reading books, trading in the zone. That will help you turn your yes power on very high. And you have to know, just like Gwen, if Gwen didn't say yes to Forex, if Gwen didn't say yes to finding the proper mentor, if she hadn't said her yes, we wouldn't be sitting here right now. It would have probably happened some other way, because I'm a firm believer in that when things are set up, things will always happen. But if she did not say yes, we would not be on ForexNChill right now. Her yes, her standing in her yes, her believing that she could do this was the answer to all of us sitting here wanting to have better for ourselves, wanting to have more freedom, time, power over our life. We've been asking, praying for something different. And that all came from us wanting that, and somebody, Lindor saying yes, Gwen saying yes, the person who brought you in saying yes. Stand in that yes power. And another one I think is very, very just that is needed is borrowed credibility. Borrowed credibility. You are working with Gwen, who is traveling around the world, teaching people, spending her time on how to do Forex. She's providing this for free for people to understand. You are connected to Lindor, the #1 educator at IML. He's been here since day one. You got Chairman 10s on your team. The youngest female Chairman 10 you're connected to. You're connected to Garrett, Chairman 100. And like I said, you're connected to Gwen, who is, you send her a message and she's responding. Those are the people that you don't have to know how to do all this, but these are the people, if you're talking to somebody, talk about them. Talk about how they show up and how they teach and how they've just been so amazing, and they don't have to do this. Gwen does not have all this stuff right here. This is not IML. You are paying IML to actually trade. This is born out of Gwen saying yes. Borrow that credibility of somebody showing up so that you could blossom. And then this is not name dropping, because I know some people who name drop and they're saying it to make themselves look good. We're talking about credibility about the people who are there who are helping you, and these people can also help them. But you have to believe, though, that you can be helped in order for you to help somebody understand how these people could help them. Tell the story about Gwen, about how she was and she learned how to trade from Afghanistan. She was in Afghanistan with shaky internet, getting so many people to join IML, helping them. If there's an against all odds story, I mean, you have Lindor, who his parents were like, they were not having it. He had to sit there and say, you know what, this is what I'm going to do. And, you know, in me doing this, you'll see. Don't believe me, just watch kind of thing. There's other stories about people. There's people who've been in jail. Clint, if you guys don't know Clint, Clint is somebody who was trained by Lindor. Clint would tell you he's been in jail. When you come and do Forex, you don't have to sit there and have no 4-year degree. This is your 4-year degree. Going to this kind of training is your 4-year degree. You share these stories with people because some people feel that they cannot be a part of this because they don't have a certain kind of background. It's only reserved for special people. Help them. Tell the story about how these people are all coming through Forex and able to make money through Forex. Share those stories. And the last one is, I want to tell you guys, you have to raise the bar for yourself. Part of trading is raising the bar about what you think you can do. Not only raise the bar, but become that. Become that person that you know that you are. Raising the bar means showing up to your training, showing up to sharing this opportunity with people. Wherever you raise that, you plan on raising that bar out of you've committed to, you can only be that by becoming that, by showing up, by marking your charts, by having your own little sessions with yourself or your training. If you find somebody else to train with, that's wonderful. But never ever sit there and say, I ain't got nobody here with me, and then I don't have nobody to do it with. Those are excuses. I'm so sorry. You have sold your own self on that excuse. This is a place where when you joined IML, you knew it was going to be online. People coming out to your neighborhood and having trade houses, that is somebody saying yes and being able to be there for you. But bottom line, it's you who are making the commitment, and you have to be your own support. I didn't say don't go seek it out. Seek it out, but don't let that be your excuse. Mindset. Aim for that place. When you raise that bar, you have to aim for it. You have to have a destination. You have to have your vision. You have to have your goals. If you aim for the ground, you will hit the ground. Meaning if you aim nowhere, you will get nowhere. Set that bar. If you shoot for the sky, at least you're gonna go up. You may not get as high as you want to, but you're going up. You're going somewhere. Set that intention. Know your path. When you get into that car, you do not just drive around in circles. You get into that car, you know where you're going to go. When you start Forex, what is your intention? Where are you going? Why are you doing this? Raise that bar for yourself. This is not just so you can, if it's just because you want a little bit extra money, by all means put that down. But raise, because you wanted, what do you want to do with that money? Where are you going to go with that money? What do you want to become with that money? Because money, we sit there and say it's the money, but it's what we want to do with it. It's who we want to help with it. So it's way past that money. It really is. Because trading, we say it's about money, but you have to get the skill set. You have to apply it, and then the money comes. So again, why do you want the money? Where are you going with this? And lastly, as you raise that bar and become the bar, you have to let go of that misplaced life. And a lot of people are joining Forex. They're joining IML. They're here because they are letting go of that misplaced life. Because how many people are here that they go to a job and know that this is not what I want to do? You get up every morning and go somewhere knowing that you don't want to be there. That's living a misplaced life. So that means you're here so that you can let that go. I didn't say let that go right now. I said let that go today. But this is the reason why you're here, to release that. You're here because you understand that that is not what you want to keep doing. So you're here to replace that and be open to the journey. Once you know that you are replacing that misplaced life, you've made that decision, you've taken that step, keep walking forward. That decision to make that change is giving you progress, is leading you to more, but be within the process of it. If it doesn't work tomorrow, be okay with it. If it doesn't work next day, the next week, be okay with it. If it doesn't work in 6 months, be okay with it. Because you know you are doing something to change that thing. You have raised the bar. You are becoming that raised bar. This is the process. Because one thing I do know is if you commit to learning how to trade, being disciplined, being focused, if you commit to that, I guarantee you those 5 or 10 years you spent in that job and that focus you put into that job could easily be replaced if you gave that same focus here. Because when you say, oh, this is too hard, you're basically saying going back to that job, and you're saying that me being here for 30 years and then retiring with a pen is easier than me staying focused on what I need to do. No. When you raise that bar, become the bar. Buy what you're selling to yourself. Buy into that. Even when you're in a relationship, if you have to ask yourself, what state of mind was I in to be with this person? You're living a misplaced life. That's mindset. Waking up within those states and looking around and saying, I'm raising my bar. I want something different. So as you can see, mindset is not just about trading. Mindset is also about life. But in this trading, you have to allow another type of mindset. You can't trade with that same mindset. You can't. You started to trade because you knew you deserved better. So continue to allow yourself to deserve better by also developing that mindset. So number 1, please, Trading in the Zone by Mark Douglas. It's in Telegram, in Gwen's Telegram. If you have also Telegram for the Reader's Library, Trader's Library, it's in there. That's the number 1 read for my team. That's a must read. And no matter how much you're connected to Gwen, no matter how much she shows up, you have to do your own work. She can't show up enough to make your life different, but she can show up enough to consistently let you know she's here for you. And if you need anything, she's here to help you. But you have to definitely do the work. So it's Mahogani. I just wanted to share that with you. I'm always sharing with everybody mindset, because the biggest killer when it comes to trading is mindset. It's not money, it's your mindset, it's your thought process. It's about believing in yourself. It's about saying yes. It's about borrowing credibility of the other people who've come before you. It's about raising that bar and becoming that person that you know you can be. Commit to those things, and you're gonna feel the change and see the change. But the change is with you. That sounds so cliche, but the change does begin with you. Anybody have any kind of questions or does anybody want to share their mindset, their story, where they came from, where they want to go, why this is so important to them to be here? Don't be shy. Yes, Kumar, go ahead.
Well, first things first, thank you so much for that. That was definitely well needed. And I just wanted to show my love and appreciation for that. So thank you again for it.
You are very welcome, Kumar. You are very, very welcome.
In regards to my story, it's really, it's a long time, but it starts to get better. So the thing is, I grew up without my mom, and I'm an only child. So long story short, it's my dad and I, and my mom, as every mother does, had postpartum depression when she had me. So what pretty much happened was that she had to leave when I was about 2 months old because they couldn't do anything to help her here. So because of that, pretty much what happened was that my dad was taking care of me, and that's how it's been my whole entire life. Like, it's literally just been my dad and I. And the thing is, we didn't know how to take care of our finances, so we were never in a well-off place. Like, we were definitely very part of the struggle, and jump a few years, and I discovered IML. I was shown by one of my best friends, and I am, for giving me this opportunity. It's like I haven't reached where I want to be in trading yet, and even though I know that, it's also I forgive myself to not give me any pressure because it's part of the process. So in my way, it's like IML is the perfect just kind of platform for me, because one, it allows me to help people, and that's the thing. I'm really big about just helping people in general. It doesn't matter who you are. It's like if I'm in a position where I can help a person, I don't care if you're a stranger, I don't care if it doesn't matter to me. I will, if I can, I will. And growing up, it's my dad is 69 years old. He's turning 69 this year, and at this point, as much as he always telling me that he loves working, I want to retire him. This man has worked over a quarter of a century for me, and there is nothing I would stop at doing. There's nothing I would not be willing to do in order to, give him that time where he can just rest and, enjoy life. So for me, it's like I'm absolutely determined to give my dad that, so I don't have to worry about money again. So I can continue with this opportunity of like changing people's lives. This is definitely something that I can feel within inside just my whole entire being, that I was supposed to do this. And it's not a matter of if for me, it's only a matter of when. I need thank you, John.
Yes, that's so true. I think you've said something that's hitting people, and somebody said if your why doesn't make you cry, it's not big enough, and that is so very true.
I agree.
I don't know.
Absolutely
Something
agree.
inside of me made me reach out to you, and I saw you in the group, and I'm so glad I did. Thank you for joining our family. These are kind of stories that make me like, I'm so glad we started ForexNChill, because it was because of stories like that, you know.
Yeah.
There's so many lives that can be changed, and so many lives that will be changed, and people want to withhold knowledge or overcharge for knowledge, you know, and this knowledge is invaluable. I mean, it's life-changing knowledge. You can't put a price on something that's going to drastically change your life, but not everybody can afford that price at the point when they really need it. And so this is my way of giving back. And, you know, it was laid upon my spirit yesterday that sometimes God blesses us so that we can bless others.
Oh,
and
that hit me. Yeah.
When you quit blessing other people, you know, you're cutting your own blessings off, because when he pours into us, we should pour it out into other people's lives, or else why would he keep pouring into us? So God bless you, and I can tell you right now, you're going to be very, very successful. So just glad to have you on the family.
Thank you, Gwen. I really appreciate that. Like it means a lot, you know, hearing that just, you know, from someone that I really look up to. So thank you again. Just to kind of close it off though, I actually have this, I'm not a big person when it comes to religion, but I actually, when I heard this quote by one of my favorite motivational speakers, Eric Thomas, he said this one biblical quote, and ever since he said it, it just really resonated with me. So it's Proverbs, what was it? Chapter 22, verse 23. And how it goes is that it starts off with, find a man who's diligent at what he does, and he shall stand before kings and not mean men. And for me, that means when I put my whole entire being, my heart, my soul, you know, my blood, my sweat, my tears, it means that I will be amongst greatness, and I won't be anywhere near mediocrity. And I actually have that exact quote tatted on my left forearm. So every time I look at it, it tells me, let me just be diligent in trading. Let me just develop that diligence, and I it's only a matter of time before I be great.
Yes. Yes.
And you know what? I listened, especially when I was in Afghanistan. I used to put on TD Jakes and my headphones to sleep through the night. And one time he said, somewhere God is keeping a multi-million-dollar business open because that housekeeper needs a job to take care of her family. So it's much bigger than us. God will keep a multi-million-dollar business. The door is open, not to bless the person who's becoming rich, but to bless that person who needed it the most, the woman who's there cleaning the offices every night because she has kids to feed. So that's why when blessings are poured into us, we need to pour it out to others. It's that pay it forward aspect.
Oh man, pay it forward, yes. One of the biggest inspirations I've ever witnessed.
This is why, guys, I gotta know your why. Like, Kumar knows his why. Kumar, he knows it, he feels it, we feel it. And I haven't talked to Kumar that much, but I feel his why. I feel his why. I feel how he feels his why. That is why he is going to see his vision and stick to his vision and be diligent. He knows his why. Go ahead, Kumar.
Yeah. Like I said, guys, Mahogany, Gwen, seriously, I appreciate you guys giving me like this opportunity just to kind of speak my story. And, I know for a fact that my story it's only going to be a matter of time before it inspires other people to show that it doesn't matter where you start, but as long as you know where you're going, that you have a goal in mind, that you know what, you can go anywhere you want in life. It doesn't matter how you started.
You know what? And I tell people the thing about Forex doesn't care, because we have people who were high school dropouts. We have people who got doctor's degrees. We have people who've been in prison. We have people, who sold drugs, and we have people, that are pastors and ministers. Forex treats everyone with the same respect. You can come into Forex regardless of your background, your religion, your sexual preference. Forex isn't going to judge you based on your character, the size of your bank account. The only thing that's going to matter is if you apply this knowledge and if you work on those charts. So it's an equal opportunity investment. So if anybody ever tries to tell you that you can't be a six-figure trader, they're lying to you. There's nothing stopping you except you, and like Mahogany says, your mindset. And if you don't have Trading in the Zone, it's on YouTube. You can listen to it. So you need to let yourself know now that you are a six-figure trader. I am forever grateful and thankful now that I am a seven-figure trader. That's my affirmation. Yes, so believe in yourself, put in the work on the charts, and it will pay off. I didn't see any progress until I started marking up at least 25 charts every Saturday, every weekend when the market closed. And it used to take me 8 hours to do it. Now I can do it in like an hour. And like I said, you should be able in 30 seconds or less to know what that market's getting ready to do. And it comes from repetition. It comes from marking up over and over. And it may feel tedious, but it's the only way you're going to progress and grow. Just sitting there waiting on somebody's magic potion strategy or indicators, you're not going to be a trader. And that's why I started teaching this market structure, because people were being hoodooed and voodooed into thinking, somebody's going to give them this little magic indicator or strategy that's going to make them rich. The only thing that's going to make you wealthy is to learn these charts like we're doing now. Depend on your eyes. Your eyes are the best tools in the market. Not a moving average or a MACD, but your eyes. And that's what every time you mark up a chart, you are training your eyes and you are learning the patterns of the market.
Well, guys, like I said, thank you again so much. I'm going to hand it over back to you guys. Thank you, guys.
Thank you, Kumar, for your share.
Thank you for sharing. Wonderful story. I can't wait to hear the outcome.
Yeah.
Although I already know the outcome.
I was going to say that outcome is already done. Outcome is already done. Does anybody else want to share their why, their mindset?
Yes.
Go ahead.
Well,
who is this right now?
This is Matthew Simmons.
Hey, Matt, go ahead.
Well, I can relate to Kamar because my mother also had postpartum depression. I lived with my mother only 3 years, 6 months out of my whole life growing up. Been to group homes, foster care, shelter streets. And then, after serving in the Army, going overseas, and then becoming a contractor, I was able to allow my mother to live with me, you know, and she has Alzheimer's. So the reason why I'm doing this business, I'm also married. I want to provide a better life, you know, for my wife, my mother, my nieces, and my nephews, you know, and then I have dreams and goals as well. So, you know, I joined this business because I'm saying yes to my dreams, you know, and I know I'm in a cocoon right now, you know, I'm not really that butterfly yet, but I'm not that larva anymore either. I'm in the cocoon, you know. That's where I'm at.
And you are surrounded by so much, so much.
And I admire you for taking care of your mother. That is, I know I've done that. I've taken care of someone in the family, elderly and sick. So that takes a lot. I admire you for that.
Thank you. Thank you.
And that's what I think that everybody, one thing that we have to understand is that we all have those things that are happening within our life that is driving us to make different decisions, and not let those things be the reason why we can't enjoy and we can't make changes in life. Let those things be something that's going to encourage you to walk forward and not only say, you know what, I want to make a change, but be a part of that progress in that change. It's not that I have all these responsibilities and I'm just, you know, I don't like my life and, you know, living in this whole place of I can't. Do something different. Believe in yourself. Have a vision for your life. Some people feel like this is how my life has always been, this is how it's always going to be, and that's where they're at. Kumar and Matthew just expressed to us and shared with us that they've had some things, but those things are pulling them in a direction to actually have those things turn them into the best of who they are. And I appreciate, Matthew, you sharing that, because we all have a story of why we are here, why we are showing up, we want this to work with us, but some of us feel like this just has to work. What I've been doing before has not been working, and this just has to work, and I'm willing to put in the time to have this work. If I'm willing to go to a 9 to 5 and work so that their children can be on the yacht, I can do it for myself. I can work and put in the time and put in the belief and the practice and work. So just understand that you are not alone in wanting to have something better and different for your life. There are plenty of people. We're all here for the same thing, the same outcome, to change our legacies, to change our families. And even if some people, they probably haven't had those things. They just want to, they know that as life is coming towards them, they're younger and they want to start their life off in that direction so they don't get to an older age and then want something different. They want to walk into their life as the person knowing how to make their own money, to make their own decisions, to be able to help their family members, to be able to help their community, because maybe they watched their parents go through it. So thank you, Matthew, very much for sharing with us your story, and then also your why. That's a big why. And
Yes,
I love
ma'am.
how you added your dreams in there. You said your dreams. I have dreams and goals of my own, you know, and to honor that. Some people, we want to help our family, help others, and we don't honor that thing within us that we also want to express. Thank you for honoring the fact that I have dreams and goals that I want to participate in as well. That's why I'm doing this as well. So I thank you for sharing that.
Yes, ma'am. And I want to thank y'all for y'all inspiration and all this good training as well.
What I know is all from Gigi. I learned some stuff. I learned a lot of things from a lot of my mentors. But when it came to being a self-sufficient trader, it was because of Gigi saying yes. It was because Gwen was creating this community for all of us. It was because Gwen was learning and sharing with us. ForexNChill, Friday nights. That means no watching TV, no going out. That means canceling your movies to the Avengers with your family so that you can be here to learn. Yeah, and you get so much to the point where last weekend we didn't have it, and I was just like, it was like, how long ago was ForexNChill? It was a bit. I kind of missed it. So, yeah. Again, I want to say thank you, Gigi, for creating this platform for all of us to be able to say yes.
Hey, we're growing and learning together.
Yes.
The journey is best taken with friends, right?
Yes, it is. Okay, before we end this, does anybody else want to share their story, their why, their vision? You're welcome, Gloria. Adebayo, did you want to share?
Actually, not that I want to. I just want to thank you guys that all what you have been doing, we appreciate it. Although I'm still learning. I'm still learning. I don't miss any Friday night forex with chill because it's as a Nigerian time. It starts at 3 a.m. So I always keep that 3 a.m. in mind and set my alarm on Friday, which is I will set it in, which is we are on Saturday now, which is 3 a.m. on Saturday. So and I'm really learning. I'm still learning. In fact, every Friday I acquire a new thing, a new knowledge. Thank you, Mama Gigi. In fact, in my working place, if I want to talk, I say, this is how Mama Gigi said we should do it. And working. This past week, this week that we just finished, I make, in fact, it has never happened before. I make $50.
Nice.
In fact, I'm very super excited that a whole me can make $50. So I really appreciate you guys. And Mahogani, Mama Mahogani, we also thank you. Thank you very much for your inspiration talk. I'm still learning. I'm following you, my two mama. Thank you very much, ma'am.
You're welcome. Thank you. You guys are giving thank yous, but it's like a thank you for showing up. Thank you for trusting Gigi. Thank you for trusting her openness. Thank you for trusting her guidance. Thank you for trusting me. Because it takes a lot for people, anybody, to open themselves up to allow themselves to be led and take advice. And also not just take it, but practice it, learn it for yourself so that you can help other people.
Yes.
You know? So yes, thank you. Thank you for
I'm thankful for this whole team because Mahogany and Grant and Jamie, they all hold it down when I can't be on here. My team is thebomb.com. So whenever I need a break or I'm busy, I can just turn it over to them and know that it's in good hands. Because, man, let me tell you, when I first started and we started growing and growing, started with like 4 or 5 people, then we've had over 200 on here some night. You know how when you nurture and make something, you're paranoid about putting it in other hands. And I remember the first night I was like, Mahogany, you want to lead tonight? Boy, I was like, this girl's on fire, man. She's got it going on. So I didn't have to worry anymore. Now I know that in my absence, that ForexNChill goes on and it goes on right, and everybody's still blessed. So shout out to Mahogani. She's killing the
Mama
game.
Gigi, Mama Gigi,
Yes.
this is
Hey.
Adebayo. I believe one day, me too, I will be part of the team that I will lead.
Yes.
All right.
That is what I've been working towards.
All right. Sounds good to me.
Team Nigeria.
Maybe we'll
Yes,
do the
ma'am.
Nigerian edition of ForexNChill, right?
Yeah.
Yes, ma'am.
Yeah. Okay, so does anybody else, and I want to say this, that we all have excuses, but this, he's getting up at 3 a.m. on a Saturday to make sure he is here. And we got excuses about how we got other stuff and we tired and this and that. It's 3 a.m. He's saying he's getting up for a London session. And we be on here for a while, so I think that he's the one.
Isn't he the one that we usually get to hear the chickens crow when we sound to the one? Yeah,
he's the chicken one. He is here for 3 a.m. until the sun rises on here with us to learn. So if he is here,
yeah, because when we don't hear the chickens, we're like, "Where's the chickens at tonight?" But we only hear.
I don't know what is wrong with them. I've not heard them crow this morning. I'm still expecting
We usually
them.
don't hear them unless we stay on until like 3 o'clock in the morning, though. And we've been trying to cut it shorter, you know, so people can get off and spend some time asleep. And y'all know after ForexNChill, I don't Forex anymore until Sunday. Saturday, I am anti-Forex.
Me too. I take off on
You got
Saturday.
to have a break from it. The only thing I do on Saturday is upload the video. Other than that, I have nothing to do with Forex on Saturday. That's the day I tell everybody to take a break. The market takes a break, and we.
Yes, and I think that's a great ending to us. Go ahead and calling this a night. We will see everybody in the training. If you have somebody who invited you here, please get back to them so that you can get into our groups. It's like Gigi said, this is going to be posted. It'll be available for you to redo and watch her mark up those charts, any of those questions that was answered. Just watch the video over and over again. I've had somebody in here who said they was watching the video and they watched it. She said, I heard Gwen say 6 times. I know somebody else who said they've watched the video over and over again. Yes. And again, when you get with our group, we have these private trainings. This right here is just one night of the week that we're together as a team learning. So please be sure to no break for you tomorrow. I know John's come over to my house and we're gonna do some trading and stuff like that. So training and trading. Well, training because no trading, but yes. And then and John, he's very smart. Don't let him fool you. He should be on here showing people stuff too.
I know. I remember that very well. I'm so excited to have him back.
Yeah, he tried to be so shy, but he's not. He is so not shy. And
Did you tell him I constantly ask about him?
I did. I said, hey Gwen, I reached out to you before and I didn't hear anything back, but Gwen said hi. Gwen wants to know how you're doing. Yeah, of course. Of course. So he knows that he is well missed, and I'm looking forward to him being on here to also share what he's learning. And he's excited for me to show him some things, and he's excited to be back on a team.
John, I can tell you that life is a lot simpler now since we learned market structure and got rid of all the crap and the clutter. It's like cleaning out your closet. All that stuff that we were misled about getting, like I said, the motions and the potions and the lotions and abracadabra stuff, you don't need it. All you need is market structure.
Are you going to go to, you're going to be there in June. Is that the June one, South Carolina? The US 30 training, you're going to be there? I don't know why John won't use his mic. He got a mic. He's a computer wizard, y'all. He's an IT person.
Oh, I know. He pretends he doesn't have a mic.
I know. Okay, yeah, we'll discuss tomorrow. Okay, we'll discuss tomorrow about Gwen's. She's going to be doing a US 30 camp with some other people. And yeah, if you go, it would be very nice for you to actually be able to meet up with her again and get some more information. I know Dr. Kathy will be there and also Cam. Yeah, so you guys have a great night, whatever Miss Gigi wants to end us with, but I just wanted to say thank you so much. This is Mahogani Jones, Mahogani R. Jones. Thank you so very much for trusting, listening to us. And like I said, if you're here for the first time, get back with the person who invited you and let them share with you how to go ahead and get signed up with us.
And as we say, if all hearts and minds are clear.
I'm clear.
All right, everybody say Forex and chill.
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 Forex and chill. Thank you, Mama Gigi. Thank you.
Thank you, Gigi.
Love
Thank
you guys.
you.
Thanks for joining.
Thank you. Bye.
Thank
you. Bye-bye.
Thank you.
Good night, guys. Thank you so much for staying on. Good night.
Good night.
Night.
Good night.
Good morning.
Good morning.
Good morning indeed.
Good morning in Nigeria.
Good morning.
Yeah.